Okay, I think we are all here. Good morning, everyone. Welcome to this third day of the June board meeting. And thank you for being all of you on time. We still have an important agenda ahead of us today before we move to the social events, which includes this time something more substantial, which is a presentation and a debate at university. But we'll speak about it for now. This morning, we'll be spent speaking about the CFO project. The CFO project has been live for some time with some objectives which I think are clear to everyone. The reasons why we initiated this project are also clear, I think, to everyone. And it's not only because it was in the strategy and work plan, like China was saying yesterday. We don't need to do everything that it's there if it's not relevant, but we really thought it was relevant. There was a lot of support by the time, a lot of support demonstrated by the responses to the strategy and work plan to this project from the different stakeholder groups with some enthusiasm. And even if we had to delay it, given what we had to anticipate, namely in terms of sustainability and other burning platforms, it was and it is necessary and important that we cover this part of the code and these challenges or questions coming from a changing role of the CFOs. I'm not going to go into the substance. This is for the project team and David to do. I'll just tell you that it is obvious that the amount of work done so far is impressive. It's really impressive, and it's also impressive that while the plan today is and was to have an interim report or an idea about the direction and the preliminary conclusions, preliminary findings, etc., and observations of the project team and the board advisor after all this outreach and work, it is, I think, more than that. I think that the takeaways from the materials that were distributed to the board and submitted to the board already allow some more than perceptions or indications, already probably some conclusions. But of course, it will be for the board to decide how to move forward with this project. I'd like to thank the project team and David for the immense work done. It was really challenging. This second quarter of 2026 for John, Carla, and David were really heavy. Only two staff members and one board member doing all this work. So I think that we need to not only to thank them, but recognize the quality and the amount of work done. The idea today is that the project team will update the board and the board members with the preliminary findings, as I said, and observations from the work stream informed by the global outreach activities undertaken to date, which were huge and important. Presentation of an academic research and literature review undertaken by Dr. Mukesh Garg, who is online with us, and welcome, Dr. Mukesh Garg, and thank you very much for the collaboration with IESBA. Dr. Mukesh Garg is an associate professor in the Department of Accounting of the Monash University in Melbourne, Australia. The board members will also be updated on the results of the IESBA survey of the CFOs and other stakeholders. So you will remember that last year there was an initial pulse survey with a restricted outreach or reach, so to speak. And then it was decided to go out with a global survey, much more ambitious in terms of scope, in terms of reach and etc., to get more substantial and more global information about the situation with the CFOs. Also, importantly, the project team will tell you about how they have addressed the core activities under the SMART framework. This is a pilot, so to speak. It's the first time that we are testing the SMART embedded in the project, and how the project team and the work stream tests their work and the process and etc. against the SMART criteria. And I think it's a very, very interesting exercise that will give us important feedback and important conclusions for the future, because the plan, as you know, is to embed SMART in almost all the projects and activities. So with this, the project team will probably tell you about their initial assessment for potential implications for the IESBA and the broader regulatory ecosystem. So I think this is going to be a very interesting discussion, because I would not be surprised if discussing this project and what we learned with this project, etc., we may end up discussing things which are more strategic for this board, for the work of the board, the positioning of the board, and some conclusions about some responsibilities which we see clear now, but are probably not for us. So that may work as well as a heads up for others to possibly in the future have a more consistent approach from the different market players with respect to some issues. And with this, I'm going to stop here. Thank you very much. I think I'm going to David, you want to briefly introduce the topic, right? And then John and Carla will present you with the materials and conclusions and etc. David, please.
Thank you, Chair. So I won't repeat what Gabriela has said, but I do want to acknowledge a few things. So I wanted to publicly acknowledge the hundreds of people who literally gave us often at least a half a day of their time, and sometimes more than that, to get this kind of feedback. And I also wanted to thank Mukesh, who's going to talk a little bit later, for the work that he's done, the collaboration. It's not, as you'll hear him go through his work, it hasn't been an easy challenge, but it's one that he certainly rose to. And I think we've got the basis for a really interesting conclusion. And then last, but certainly not least, I really want to make sure that we do acknowledge the work, the frankly Herculean work that John and Carla have done. To say it was significant, honestly, is an understatement. And I think from my perspective, it's certainly been a privilege to work with them so far on this project. And, thank you both for that. So I want the board to know that this was a group, I think we talked about this a little while ago, that we've never connected with before in this way. So to get this off the ground really was a significant effort, and hence the acknowledgement I want to give the two of them, as well as the hundreds around the world that have helped us. So with that, John, I'm going to turn it over to you and kick us off.
Okay, thank you very much, David, and thank you for the kind words. We do definitely appreciate it. It has been, it's been a very busy time, but we certainly appreciate that. Again, good morning, everyone. And so just what, we wanted to go through the findings, obviously, from our work so far. In terms of the objectives for today's session, in terms of the remaining engagement, as Gabriela and David have both mentioned, there has been a significant amount of outreach already. We've had, including global roundtables in Milan, New York, Nairobi, Hong Kong, and also Latin America, and other focus group meetings. We've set these out in the agenda paper and also in an appendix to these slides. So we don't intend to go through those today unless there's any specific questions about those, but there is the information at the back of the slides as well. We do have a couple of more outreach activities to be undertaken. We have a focus group meetings in Melbourne next Friday with CFOs and other stakeholders. Just wanted to thank CPA Australia in particular, who are hosting the event, and also CA ANZ around assisting determining or finding participants for those focus group meetings. We also have a focus group meeting with the new IESBA user advisory group on June 25th. So that'll be really interesting to get. We have had some input from investors, but this will be a really good opportunity to get that investor voice as part of that. In terms of the evidence base, like Gabriela said, the bulk of the session today will be working through what the project team's activities and evidence gathering activities has been so far. And very shortly, we'll have a presentation from Mukesh in terms of his findings from his research and literature review. We'll go through the preliminary findings from the project team. Carla will guide you through how we've aligned our work to the SMART framework and how that has helped to guide our work as well. Again, that's supplemented in the agenda paper, but also we've got a more detailed slides at the back in an appendix, but Carla will run through that as part of her presentation as well. And then finally, yeah, we'll go through the indicative implications that we see for IESBA. But as Gabriella mentioned, we think that there are actually a lot of implications for the broader regulatory ecosystem as well. In terms of the preliminary findings, I did just want to run through them quickly and then just to give you that framing in terms of what we're thinking and then go through how we've got to that through the presentation today. So really there's sort of 5 key things. It's very clear that the CFO role has significantly evolved and expanded. Secondly, the ethical issues are not necessarily all new, but the context, the speed, the complexity of those is markedly different and impacting through significant pressure, etc. One other thing that's been a major finding is that there appears to be a relatively low level of awareness of the code in terms of the CFOs themselves. Often we would ask the question in terms of when was the last time you looked at the code, and it was often a very long time ago, or maybe as part of their accreditation to become a qualified accountant. So that is something that's a real interesting thing, or was a bit of a surprise in terms of that. Also, there's also seems to be a very low awareness of new standards that are issued by the IESBA, for example, around technology, sustainability, tax planning. There were very few CFOs, if any, that were aware of those new standards. So obviously that has implications for us, but also the broader community as well. Also, there is clearly evidence around issues around accessibility or visibility of the code, and we'll walk you through those sort of aspects as well. Essentially, at this point, we still have some work to do, but there's no substantive evidence that the code is not fit for purpose for the exposed or the evolved role. That is, yeah, and so we'll go through that as well. The other major finding, I guess, is that around about 50% of CFOs are professional accountants. The other half are from outside the accounting profession. There is a significant variation of that across jurisdictions in terms of those percentages. We've seen that many of the CFOs from outside the profession are coming from different pathways through, for example, MBA, maybe from a strategy background, investor relations, which mirrors, I guess, the expansion of the role or the morphing of the role and those new skill sets. And this may be an impact on the profession itself. We've also seen that quite often CFOs move away from the profession once they become within those roles. So today we're not after any decisions from the IESBA. We just want to go through our preliminary findings, and obviously it's dependent on the remaining activities and analysis that we need to undertake. But we did want to provide a directional steer towards the likely outcomes and recommendations for our September report. Just on this side, it's just setting out some of the key takeaways or some pointers from the board at the March board meeting. There was suggestion around ensuring that we segment the CFO population due to the differences in the roles and the support structures that varied between entity size and sectors, etc. So what we've done to date is we've ensured that we've engaged with CFOs, well, from the private, not-for-profit and public sector, but also across entity sizes and industries. But then when coming up with our recommendations, we'll obviously consider the breadth of the population and the level of support that may be needed in those different segments. Another point was around distinguishing the matters that may point to standard setting or non-authoritative material. Again, we haven't approached this with any preconceived ideas as to what the final recommendations would be, but I think through today's presentation you will see where we're likely heading in that regard. There was another point about being clear around the articulation of the initiative's problem statement and the intended outcomes. So we've tried to address that in agenda item 8A in particular, and we'll obviously refine that as we go towards the final report and recommendations as well. Another point was around whether ethical challenges are different across ownership structures, such as startups, for example. Again, we've engaged with CFOs from smaller organisations. We've also engaged with CFOs from that are called fractional CFOs, and they're often involved with small, medium-sized entities as well. And in fact, one of the panellists tonight is a fractional CFO, so you'll hear that aspect as well around the smaller side of entities. And the other one was around the CPD requirements and whether there's mandatory CPD on ethics and whether that varies. So what we've seen so far is that there certainly are some PAOs that have mandatory requirements around CPD for ethics, but that does vary across jurisdictions and some don't. And again, we'll go through that today as well. So in terms of the highlights for the March to June so far. So the academic research, the slide didn't go forward. The academic research has been finalised. We've gone through the global engagement. We've done the extended surveys, and Carla will go through the results of that as well. Another thing we wanted to note is there has been some letters we received from WPK, IDW, both German PAOs, the GAA, and also the AICPA PEEC. Some of the key themes that were sort of across those letters that we received, there was questions about whether the initiative is within the IESBA's remit. There was questions about whether non-PAs should be considered, and also highlighting that some PAOs do not have professional accountants in business. There was also mention of not supporting standard setting, but in particular around trying to set standards specific to the CFO role or CFO specific requirements. We've responded to all of these letters. We provided background on the commencement of the initiative, and in particular highlighting that this was a priority through the 2024 to 2027 strategy and work plan. And as part of that, many PAOs, including IDW, AICPA, and some of the other GAA members, they very much supported an information gathering initiative on CFOs. And many said the standard setting may not be the best approach, but there was certainly support for non-authoritative material at that point in time. We did note that, that some PAOs do not have PAIBs, but we've also seen through outreach that many PAOs have up to 70% of their membership base from the professional accountants in business. We also noted that there's no intention to move away from the principle-based approach in the code or to set CFO specific standards. So with that, I'm now going to pass over to Mukesh to provide an update on his academic research and literature review. Also just wanted to personally thank Mukesh for all of the effort that he's put into this report. It has been a lot of work being put into it, and we're very happy with the result and very happy with the coordination and collaboration with Mukesh. So with that, Mukesh, I'll pass over to you.
Thank you, John. Good morning, everyone. Good morning, Chair, and thank you very much for giving me this opportunity to be able to present to the IESBA board. Thanks to all the board members, and in particular David, because David has worked closely with me in finalizing the report, and the feedback that I received from David, John, and Carla has been extremely instrumental in getting the final report out to the board members. As part of today's presentation, as you can see the title, it's Reframing Ethics in Finance Leadership, the Evolving Role of CFOs in a Multi-Risk World. We embarked on this project towards the end of last year, and working closely with David, Carla, and John, I was able to finalize this report, which I'm going to present as a summary. If you look at the purpose and scope of the review, so the main objective of this particular report was to review and test whether the evolution of the CFO role has changed, and this evolution of the role, what are the important factors that has contributed to this change, and how the literature provides evidence on the responsibilities and the change in the responsibilities of the CFO role. And by the use of the word CFO, I don't mean just the CFO, any other senior finance function individual who is responsible for a senior finance role with different designation would be considered a CFO for the purpose of this report. Why it matters to us, the ethical issues, as John mentioned earlier, which are related to the evolving role of the CFO, and the literature frames those responsibilities and offers some insights as to where things worked in the past and where things may not work in the future, given the changing role of the CFO. The code identifies the need, and adding to that identification of the need, I did the literature review. We have the traditional finance stewardship role. That was a traditional role of a CFO looking after the finance function. But broadly, the organizational landscape has changed. And when we look at the organizational remit, risk factors, and different types of risk, emerging risks such as technological risk, AI-related risk, then we have sustainability, which in a broad way takes into account climate change, recycling, circular economy. All these aspects have completely transformed the way the CFO has to play a role in the organization. And more importantly, how the CFO communicates with the broader stakeholder. In terms of the relevance to the IESBA, it is about other evidence and testing the literature review against what is there outside of the literature and what needs to be done in terms of engaging with other stakeholders. And by no means, this literature review that I'm going to introduce to all of you by itself determine whether the code needs any change. So this is just a preliminary study to direct the IESBA as to what can be done in terms of engaging with the stakeholders in the future. When we think about the CFO's role and the ethical pressure the CFOs face, I'm going to introduce the fraud triangle, and I'm not using the fraud triangle to suggest that the CFOs engage in fraudulent activities. What I mean to suggest is that the fraud triangle, which talks about pressure, opportunity, and rationalization, very well fits into the CFO's role as well as the ethical challenge that CFO face. So thinking about the pressure, and the evolving role of CFOs, the pressure, for example, the climate change related pressure, the change related to sustainability. Then we have geopolitical pressure. For example, if there is a pressure on the performance of the organization because of tariffs imposed by different countries, different jurisdictions, all of these upcoming pressure points are definitely relevant to a CFO's role as it has been in the past. So it hasn't changed, but the pressure points have increased and the reasons for pressure has definitely increased. In the past, it used to be mainly financial pressure, but because of all these changing landscape coming from different aspects of organization and the external changes that organizations have to deal with, the financial pressure has actually increased and not decreased. Then the aspect of opportunity is still relevant. Opportunity is all about the weakness in internal controls, the weakness in governance, weakness in oversight. So if there is a pressure and there is an opportunity to give away to that pressure, then there is a likelihood of ethical wrongdoing or ethical challenge for any CFO. The third aspect of the framework is the rationalization. So under the pressure the CFOs are currently facing, it's a lot easier for them to rationalize. The mindset allows, a rationalization mindset allows a CFO or an individual to justify their unethical behavior, which is no different from what it used to be 10 years back. But because the pressure points have increased, because of the dimensions and the emerging role of CFOs, we have to be extremely mindful of the three different aspects of this framework, which is pressure, opportunity, and rationalization. So as part of the lit review, I looked at the factors contributing to ethical pressure and misconduct, and I will break this finding of my lit review in 4 different areas. The first is related to factors that are behavioral traits, overconfidence, and moral disengagement. So prior studies find that there are certain behavioral traits that an individual possess, and because of those behavioral traits, they are more likely to commit a fraud and more likely to engage in unethical behavior. A few studies have also found that there is an aspect of overconfidence. And because of the level of overconfidence, they tend to behave unethically. And finally, there is an aspect of moral disengagement. The cognitive moral disengagement and the rationalization aspect, they go hand in hand when it comes to moral disengagement by certain types of CFOs, depending on the jurisdiction as well as the kind of pressure they have to deal with in the workplace in their role of CFO. The second list of factors that contribute to unethical behavior among CFOs relates to aspects that are external and business related. For example, volatility and uncertainty. Volatility related to financial outcomes, volatility related to changes in commodity prices, or uncertainty related to what is going to happen in terms of economic growth. All these factors that are more related to financial pressure results in unethical behavior among CFOs. Then there are market fluctuations of different types. For example, not meeting market expectations in terms of earnings. So CFOs collude with CEOs to report earnings that are better than what the actual ones are, which is in line with what the market would like to see. And there is an aspect of economic instability, which is constantly putting pressure on the CFOs to engage in unethical behavior. And when it comes to the aspect, coming back to the framework that I mentioned earlier, the one aspect is opportunity. So collusion is quite common. Some of the studies found that CFOs collude with CEOs, and more likely it is the CEOs who collude with the CFOs. When the governance is weaker and there is less of the pressure and the challenge from the board or the governance to monitor the activities of the CEOs, they collude with the CFOs to engage in misconduct. So it is more likely a governance failure at the organization level. And a lot of the studies that I have identified in the literature review and the report that has been shared with all of you has identified governance failure as the most important factor, which is part of the context that I have shared about the opportunity that exists as a result of the failure of the governance. And finally, the rationalization and the pressure comes from compensation packages, performance measure pressure, and incentives that are offered to the CFOs. Compensation package, studies related to compensation package has mostly focused on the CEO's compensation, but it indirectly fits into the compensation of the senior executives of an organization, which also includes the CFOs. So compensation package, which is an incentive for a CFO to act unethically or engage in a misconduct. And similarly, performance of the organization, showing a picture which is not true. By cooking the books, what we say earnings management is quite common among organizations, which is part of what we call unethical behavior. And this is all because the incentives are such that it does put the CFO in the basket of conducting misconduct or being engaged in a unethical behavior. So prior literature, in a nutshell, looks at different aspects as we have put together in 4 different baskets. One is the individual behavioral trait. The second is the external factor, which puts pressure. The third is the governance factor. And fourth is the incentive offered to the CFOs. Emerging areas of CFO ethical judgment. When I was conducting the lit review, the challenge that we had is that all these emerging issues, for example, AI and technology, climate change, sustainability information, geopolitical risk factors, and geopolitical climate that the CFOs are currently engaged in as a result of what's happening around the world, there was lack of literature associated with these issues that the CFOs have to deal with. And the lack of literature is mainly because of the timing. And I'm going to talk about the timing aspect a bit later. Let me focus on the 5 areas that I'm going to talk about in terms of the emerging role of CFOs, which put ethical pressures on the judgment. The first is related to AI and technology. The way the AI is changing so fast and the technological landscape is changing so fast, it continues to put pressure on the CFOs when it comes to reliability of the output that we get from AI. And the issue of judgment, the issue of accountability becomes quite important for the CFOs. Employees can be using unauthorized tools. There could be bias in the use of technology because the output itself can be biased. and human judgment is involved, and where human judgment is not taking into consideration or not challenging the output of AI, this is where the role of the CFO can be quite in a dicey situation, because the output is ultimately the responsibility of the CFO and the organization. So they cannot take the aspect of accountability out of the use of AI and technology in the workplace. The second issue is data governance. The quality of the data, whether it is AI generated or technology generated or any kind of data that comes out to the market, to the stakeholders, the CFO has responsibility towards that. Use of machine learning, use of technology, and big data sets that are complex. And then we have the confidentiality issue with the use of AI, because if an open access platform is used, and data is shared in the open access platform to analyze information, then there is an issue of confidentiality. On top of that, there are challenges related to cybersecurity. More and more organizations are getting cybersecurity hacking. So cybersecurity breaches has become very common in small and large organizations. Large organizations are more susceptible because they have the money. With smaller organizations, they do not have the skills, they do not have the technology to protect themselves from cyber attacks. So this again, directly and indirectly becomes a responsibility and the remit of the CFOs. Third issue is related to sustainability. As we progress into the way the world has changed, we have S1 and S2 from International Sustainability Standards Board. Climate change reporting and sustainability reporting has become an important part of reporting by large entities. And CFOs have to deal with issues such as greenwashing. There's the issue of data limitations when it comes to reporting against Scope 1, Scope 2, and Scope 3 emissions. There is a big assurance gap, because what the organizations have been reporting on climate change and their sustainability reports, in the past, they were not audited. In the future, there would be mandatory audit depending on the size of the organization. And there will be increasing pressure on the CFOs because of the assurance gap and investor communication on sustainability related information on the organizations. So when it comes to sustainability information, greenwashing and the question that stakeholders can challenge an organization on definitely remains a challenge for the CFOs as well as the CEOs. Then comes the geopolitical environment, and the climate of geopolitical risk is becoming more and more challenging because there's a lot of uncertainty, a lot of assumptions that are being made. There is a lot of fake information that is moving around the world through media as well as other social networking challenges, social networking platforms that puts tremendous pressures on the CFO. These fast-moving assumptions as a result of geopolitical development that we see in the Middle East, in Eastern European countries, as well as the rest of the world, requires CFOs to deal with supply chain challenges and market uncertainty at a level which was never been the aspect that the CFO had to deal with. So if you think about these four important issues, AI and technology, data governance, sustainability information, geopolitical climate risk, going back into past 10 years back or even 15 years back, the kind of landscape the CFO is involved in is quite different. And finally, the accountability gap, whether it is accountability related to the use of AI, accountability related to governance of data, or any kind of cybersecurity or cyber breaches, and any kind of greenwashing challenge that the organization may have, especially when it comes to Scope 3 emission reporting. The accountability sits with the CFOs, and the gap is getting more and more widened because the line of accountability is getting more and more blurred. So where is the CFO responsible? Where is the CFO not responsible? That line is becoming more and more blurred. As a result of that, there's a need of more specialists in an organization who can guide the CFO, but ultimately the CFO remains responsible. Coming to the literature related to all these five different aspects, as I mentioned earlier, a lot of the work that I have presented in the report is based on industry reports from different types of organizations, including the Big Four, because academic literature, especially in terms of direct influence of these five aspects on the role of the CFO, is very limited. So there is skill gap when it comes to the function of the CFO and the role of the CFO, and there's a time pressure because a lot more has to be done faster under tremendous pressure, which was not the case 10 years back. Additional context of CFOs that I have researched as part of the report includes three different aspects. The first is the not-for-profit CFOs. A lot of the CFOs work for not-for-profit organizations. They can be part-time CFOs, or they could be working under different type of incentive. They may be working voluntarily as a CFO for not-for-profit organizations like charities. So there is an issue of balance mission with financial sustainability and ensuring that the work of the CFO is within the guideline of the code as well as they behave more ethically. So the pressure point are more related to the cost and where the revenue generation is for all these different types of not-for-profit entities. Then we have the public sector CFOs, which I analyzed as part of the lit review. So the issue of fiscal discipline, where the budget is an issue, where the CFOs in the public sector, they have constraints related to the financial resources and the obligation towards meeting the stakeholder requirements, especially when it comes to a larger community that a public sector organization has to service. And the third is CFOs outside PAOs. David and both John mentioned about PAOs, especially John introduced us to the aspect of CFOs who are not part of professional accounting organizations. So there are a lot of CFOs in different countries as well as different professions and companies and types of organizations where the CFO may come from a background which is not accounting background. They can come from management or human resource background or technical background, but they have trained themselves in the workplace and through different sources like an MBA degree, where they are not typically under the same pressure and guidance that comes for a professional CFO who is part of a PAO. But they may have certain guideline and meet the codes of different types of associations or professional bodies of which they can be members. So at this point in time, it's not very clear who are they associating with and what type of association they are members of, for which they would be abiding by the ethical code of conduct because of their membership. So the perceived risk of lack of accountability due to non-membership is a very important challenge for the CFOs because they may assume they are not accountable, and this may be the perception, but this may not be the truth because they may have obligations under other codes for which they are responsible. Coming back to the research that was conducted as part of the lit review and the evidence, I would like to focus a bit more on these 5 points. The first point is academic literature heavily focused on fraud and earnings management. Going back into the last 10 years, and in particular the last 15 years, most of the research that you would find in the lit review report is focusing on the last 10 years of literature, but I've also identified certain studies that are important for the purpose of the report, which are older than the last 10 years. What I find is academic literature heavily focused on fraud committed by mainly the CEOs and to some extent the CFOs. And most of the literature related to financial misconduct is limited to earnings management. Earnings management is not a fraudulent activity. It is managing of the accruals. And in the literature, most of the literature focuses on earnings management. The reason being is that it is easier to get the data to be able to estimate the quality of accruals and therefore determine whether there is any kind of earnings management. And going back to the fraud triangle, where we have pressure, opportunity, and rationalization, whether it is fraud or earnings management behavior or meeting or beating earnings forecast by the analyst, the 3 pressure points, the 3 aspects of the fraud triangle, which is the pressure, opportunity, and rationalization, fits in very well across the literature. There is limited evidence on the CFO's role, not only in AI sustainability and geopolitics, but also when it comes to earnings management and financial misconduct. And the reason for limited evidence is that bulk of the focus among the researchers has been on the CEO's role. and very little evidence exists on the CFO's role, in particular when we look at the more emerging challenges and the risks that are related to geopolitics, sustainability, and AI. For example, AI concept of AI is quite recent, especially when we think about generative AI tools like ChatGPT, which came out in 2022. And when it comes to sustainability, it all started way back in 2016, Paris Agreement, and then we have net zero adoption across multiple countries in Europe and across the world. Then we have the International Sustainability Standards Board that came out with S1 and S2. Then the IASB came out with assurance standards related to sustainability and climate change. And more importantly, we have geopolitics right starting from 2022 when the conflict in Eastern Europe started, and then we have the Middle Eastern conflict. The academic community did not get the time to publish research in these areas of the changing role of CFOs. So there is limited evidence when it comes to these evolving roles of CFO and dealing with these risks related to AI, sustainability, and geopolitics. The third aspect of limitation when it comes to research gap is that research publication lag affects emerging topics. When we conduct academic research, we need data. We have to develop the models. We have to adopt a certain methodology, whether it is qualitative or quantitative. Then we have to go through the review process. And the review process can be quite lengthy, especially when it comes to high quality journals. It can take anywhere between 12 months to 24 to even 36 months before a paper from the starting of being submitted to a journal to getting published. It takes a fair bit of time. So this is the reason why we tend to see a lot of lag. So the aspect of sustainability and climate change has been in place for at least 6 to 7 years with a strong emphasis. But a lot of the literature has only started to come out in the last 2 years. So there is a lag of at least 12 months to 36 months in most of the literature when it comes to issues that are emerging, for example, geopolitics. The fourth important aspect of the literature review is that most evidence is concentrated in developed markets. And I'll give you a reason why this is the case. And when I say developed markets, it is primarily concentrated in the US. And second would be UK. Third is Canada. And probably fourth would be some of the Western European countries like Germany, Netherlands, France, and Spain. And then comes, when we look at Asia, especially in Asia, the most emerging research is coming from China. Now, the question is why the evidence is concentrated in developed markets. When researchers publish, they have to publish in high quality journals. And traditionally, English-speaking countries, mainly the US, have the breadth of the literature that has been published over the last 50 to 70 years in accounting and finance. And most of the journals that are considered to be the top journals, they are located or managed by US universities, followed by the British universities. Even though we see a lot of literature coming out of China, the publication is mostly in the Western journals. So as a result of this concentration, the other challenge that we have for the CFO project that we are engaging in is that the evidence is restricted or limited to developed countries. Many other jurisdictions, especially Asian countries, and evidence from Africa and South America and Central America is missing in the literature. So this is again a very big limitation for the research community and the users of evidence from literature, is that not only the literature is biased towards developed countries, the evidence is also related to developed countries, and the journals are also targeting evidence that is coming from developed countries. Whereas when it comes to the role of IESBA and the issue of ethics for CFOs, it spreads across all the countries around the world. And this is where more evidence is required from developing countries and jurisdictions that have been ignored by the literature for a very specific reason. Therefore, there is a need for more global and multidisciplinary evidence to be able to make a call on what has to be done next. The key observations for IESBA, there are 4 different aspects that I would like to focus on. The first is pressure points. The pressure has increased reporting judgment requires knowledge and experience and information about emerging roles and emerging risks and challenges. Incentives have changed a bit, not a lot. Financial incentives still plays an important role, but there are other types of incentives that are becoming more and more important. And I have already mentioned the governance failure. Governance failure has been the case in the past, but even when we look at the last 10 years of literature, there's been aspects of governance failure, mainly related to weaker governance through the weakening of the monitoring of the board. Internal control aspects are stronger in countries like the US, but in other emerging markets in Asia, as well as Eastern European countries and Africa, the concept of internal control, the governance mechanism is still not as strong as what we see in Western countries, which remains a challenge for CFOs operating or working in these countries. The context has changed. CFOs now the influence of CFO extends across financial functions as well as non-financial. For example, climate change report, sustainability report. These are non-financial information that the CFO also are responsible for. Anything to do with enterprise risks, stakeholder communication, challenges related to geopolitics has become an important part of the role of the CFO. As a result of that, the level of competence that the CFO requires, the kind of care a CFO has to take, and when making decisions, the accountability that the CFO has to take up in the role of a CFO, that line has become more blurred, and that puts more pressure on the CFOs. And finally, the point is about targeted evidence. As a result of the gap in the literature, it does not mean that there is no need of more information and more stakeholder engagement. What it means is that because of the gap in the literature, and the reason for the gap in the literature is very important for us to remember why the gap is there in the literature. There is a need to triangulate research with surveys as well as different types of outreach across different jurisdictions. With that, I'll open up the floor for any questions that the IESBA members have, and I'm happy to answer your questions and take comments.
Okay, thank you very much, Mukesh. That was a very interesting presentation. Very good job. Thank you. I'll pass over to you, Gabriella, if you wanted to see if any board members have any comments or questions.
Thank you very much, John, and thank you very much, Mukesh, for this very insightful presentation and for the important information that you are adding to this project. I was listening to you, and it's interesting because we are always, I think that my colleague board members have thought the same, the links with other issues and other topics that we have discussed this week and that we are discussing recurrently. Links with firm culture and governance, links with sustainability, links with A&I, links with geopolitical changes. So a lot of things that we are discussing outside this project, but that your research, your academic research piece really brings into the conversation. Thank you very much. Very important, very relevant, and very educational for us. So I will open the floor now for questions or comments from board members, and I see Amarjit, please.
Yeah. Am I audible? Yeah. So thanks, Mukesh, for this presentation. A lot of interesting points there. I just had one broad observation. So somewhere in your presentation, you mentioned that earnings management is quite common. And there was a lot of emphasis on fraud in the earlier slides. So I just wanted to sort of, get a better handle on that, better understanding. Do we have the data that supports that assumption? It's a question of what is the big picture? Do we have a good understanding of the landscape? What is the worldview around, what we are trying to do here? So I'll tell you where I'm coming from. We've had SOX. We had SOX is Sarbanes-Oxley Act. We had Dodd-Frank Act. We had similar legislations around the world. We have multiple corporate governance codes. We have OECD work on corporate governance principles. So the big question is, has the corporate governance, including the role of CFO, improved over years, or uh, or it has worsened, or it has remained what it was earlier? So my suggestion is, as a part of research, can we also check on the enforcement data, and you will get that from securities market regulators website, in terms of what is the incidence of fraud over time. Is it showing an increasing trend, or is it showing a declining trend? Also, what is the number of settlement cases outside the prosecution? How many cases have been settled on corporate frauds over time? Uh, so this is one piece, but nonetheless, I'm not saying, irrespective of the data around this very fundamental aspect, for the reasons that you brought out in your last slide, I think the project is very relevant for IESBA. But what I'm trying to say is that let's not justify this work on the negative premise that there are a lot of frauds, and frauds have been increasing. That we need to test that against data. So, but despite that, I mean, irrespective of the trend, whatever the data may show, there are good reasons which you articulated very well in your last slide. Thank you.
If
Thank you
I
very
may
much,
respond to
Abhijit.
Mr. Singh, I'll be happy to respond. I completely agree. When Sarbanes-Oxley Act was introduced in 2002 in the US, and subsequently in the UK, the legislation was passed. In Australia and many other countries, there's been a lot of governance changes and regulatory changes that were introduced. As a result of that, the instances of fraud has definitely reduced. Not only instances of fraud, but instances of accrual-based earnings management also went down. There was a paper that published in 2015 that shows evidence of how, because of the Sarbanes-Oxley Act, there was a switch from real accruals-based earnings management to real earnings management. Accruals-based earnings management is manipulation of accrual numbers, like, for example, preponing future transactions or postponing current transactions into the future. That has reduced as a result of the regulatory changes. But real earnings management has increased. And real earnings management is not unethical behavior. Real earnings management, examples of real earnings management could be cutting down on R&D activities or cutting down on advertising activities. So these are not fraudulent activities, these are not unethical activities, but they definitely have consequences for the organization and the broader economy. Giving an example of Australia, the cases of fraud has definitely gone down. In one of my studies published in 2018, what we again find is because of the regulatory change in Australia, introduced by the Australian Securities and Investment Commission, ASIC, and the ASX, which is the Australian Securities Exchange. What I find in my study is that again there's a shift from accruals-based earnings management to real earnings management, because the CEOs and the senior management are under the pressure of governance and monitoring. The second point that you mentioned is about the negativity when it comes to starting the whole project with the idea that the fraud has gone up. I'm not at all suggesting that the fraud has gone up and the fraud would go up, but definitely what we can see is that the pressure is increasing on the CFOs. And as a result of the pressure, there and in the presence of some level of opportunity, no matter how good the internal controls are in the US under the Sarbanes-Oxley Act, there are instances of miscommunication, there are instances of misfiling, there are a lot of instances of restatement of financials. Restatement of financials is one of the measures we use for financial misconduct, where financials are restated by the organization, and the numbers have been significantly lower compared to what has been in the past. But SEC times and again continues to send out comment letters questioning the management for the reported earnings. The number of instances of restatement is a lot lower in the UK setting and the Australian setting, which can be for multiple factors, depending on the size and the kind of pressure the organizations have to face. The third is the rationalization. No matter what happens, what my literature review suggests is that CFOs, under the pressure that they're dealing with because of the evolving role as a result of the landscape changing, they continue to rationalize their behavior. And this is where IESBA has to be mindful of in terms of getting new evidence as to how the emerging role puts extra pressure on the CFOs and what can be done. But thank you very much for the question, and totally agree with Mr. Singh as to the points that he has made.
Thank you very much, Mukesh, for the comprehensive response to a comprehensive question from Amajit. Mark, please.
Thank you for the presentation. It is certainly, a really interesting issue, and it's good to have the analysis and understand some of the issues that CFOs face. However, on the other hand, I'm in this sort of, well, life's hard, isn't it? Like if I look back over my working life, things have got more difficult. And that's because, in the context of an entity, financial reporting has got more complex. The structures of corporate entities has got more complex. As you identify, and I see it a lot in the issues you bring out in slides 10 and 11, governance is a big issue because quite often it's weak or ill-defined or shared, which means that there's a lack of clarity over responsibility. But we're all doing more than we used to do. I sit here at the board meeting and 400 emails a day arrive, and we're all doing more with less. But that's sort of the price of the ticket, isn't it? If we're here doing what we do, things are just more complicated and more challenging. And that is sort of a thing we have to cope with. Like it's really good to have the analysis to show that the code is not deficient. But in a sense, I'm really interested to see where this discussion goes, because we can't make good all the ills in the world, and nor should we try. I think people in the CFO role are in many, many cases doing an exceptional job in a complex organization. And that's why they are doing that role and I'm not. But in a sense, we just sort of have to accept that the world in which they're operating is a fact. And I don't know what we're trying to say is expected of us, or indeed why anything should be expected of us, because that's just the way that things develop. So I really like having the insight, and I really sort of look forward to understanding more as this work sort of goes through. But I am sort of struck by the fact that, we are where we are and we can't fix everything.
I'm happy to respond to it. A couple of points that I would make. Of course, the CFOs are doing a fantastic job, but one thing we would appreciate is the fact that the world is changing a lot faster, and what we have seen in the last 5 years increases the pressure on the CFOs. As you rightly mentioned, you're getting 400 emails, and you're doing a lot more work. A CFO is doing a lot more work, and when the CFO is under tremendous pressure, there can be failure of governance, there can be failure of accountability. I'm using the word can, I'm not saying would be, and there can be some level of rationalization involved as a result of the tremendous pressure the CFOs are in, and more when the world is more volatile. In the past, we did have geopolitical issues, but climate change was not a big issue as a matter of an organization having to deal with it 15 to 20 years back. Now, on top of geopolitics, we have cybersecurity attacks, which has become quite common. And then you have, on top of it, technological changes and the pressure point related to how AI is evolving, where the CFOs have to make sure that the organization is able to deal with the pressure coming from other organizations they are competing against. So the pressure points have become more common. That's the point I'm making. I'm not at all suggesting that the code is not fit for purpose anymore. It is more about educating, and it's more about sharing the information and getting more inputs as to what other stakeholders have to say across the different jurisdictions.
Thank you, Mukesh. David, please.
Thank you, Chair. There's a couple of things I think might be helpful context. One is when we look at the academic research, it was meant to give us some view as to what's happened and whether or not we could use that insight to understand a little bit more the velocity of changes and the magnitude of the pressures and changes. And the view around that was the best predictor of future behavior is past behavior. So yes, a lot of things have been put in place regulatorily, but that wasn't really our focus. It was just to understand what can we draw from what's happened to get some sense of what we need to be thinking about. That's really what it is. And the second piece I wanted to emphasize, and we'll give more examples of this, which Mark, I think will speak to your point. A lot of the feedback that we've heard as John's going to walk through, and I just want to give a tiny bit, which I think is helpful, is that most people end up in difficult situations because they don't realize they're in a difficult situation. And it's not that people set out with malintent for the most part. Yes, of course that happens. And our focus is not around the malintent because to your point, Mark, you can't fix everything. However, there is a lot that's happening that isn't being recognized as a pressure point. And as a result of that, there's a lot of justification for behavior because, for example, there isn't enough clarity around, well, how do I need to think about this, for example? And one example we were given, which I think for some of you in the regulatory space might scare you a little bit, investors perhaps as well. But the example we were given is there was a particular CFO that worked for an organization that was a startup, and they were looking for funding. And, as happens in startups, you look for funding, you're looking to scale. I mean, all of these things are quite normal. And the knowledge of what was really happening in the company and where they were from a forecast of profitability, the outlook perspective was one thing. How it was framed to raise funds was another. The justification being, if we don't get the funding, we're going to have X number of people that don't have a job. So it's this kind of thing that gives you just some example of how that triangle works, which is why we introduced the triangle around opportunity, et cetera. So I just wanted to contextualize that it's that analogy, not fraud. It just happens to be the fraud triangle, but actually it has applicability quite far beyond that. So I just wanted to kind of give the board that sense of, we're going to give you lots of examples. Some examples you may be aware of, some you may not be aware of. But the focus is not on fraud. It's about how do we better help CFOs? What do they need? And I think Gabriela introduced this concept earlier. It's a whole ecosystem. We're but one actor in the ecosystem. So keep that in mind as we go through this, because I think it'll help the dialogue as we explore it a bit more. Thank you.
Can I have half a follow-on question, Gabriela? Just like the thing is that's really helpful, David, but that example is a really good example of poor governance in the part of an entity. And, many of these issues where CFOs are being put under intolerable pressure or things are being asked and they can't do, or more is being added to the day job, is actually a failure of governance. It's not a failure of the CFO. It's not a failure of the code. It's not a failure of an ethical framework. It's a failure of governance.
So I would go one step further and say it depends what the CFO does. So we heard examples like this, similar ones, where CFOs actually resigned and said, can't do it. We had others where the CFO got quite comfortable and thought, you know what, I can do this because they had rationalized it. So you've got both outcomes. So I think, yes, the sources of failures are many, many things, broken systems, governance. I mean, there's all sorts of things. But the reality is it's a human decision at the end of the day as to what you do. And that's what we're talking about, I think, here is there something we need to be doing? And if so, how and where and who?
Hi, thank you for this conversation, which I'll probably go back to at the end, but now I want to give the floor to the board members. Chana, please.
Thanks, Mukesh, for the presentation and for the team for all the work that David, John, and Carla has done. I have excuse me, a couple of things. One is to be careful about saying that there is a perceived risk of lack of accountability due to non-membership, because those other people also, they would be bound by another code, or the organization has assessed them as responsible people. And similarly, like what Mukesh said, because of SOX, then there was flow-on impacts in other countries where the CEO and the CFO has to do a certification, in most cases in listed companies, that the accounts are true and fair. So, there are other controls in place. So you might have to be a bit careful on how you frame it, because will be otherwise sort of saying just because you're a non-member, you're not accountable. Then if we go to slide 12, I thought that has a lot of interesting parallels with the FCG project. So it's sort of similar things are there, like, the incentives, the governance failures, accountability. I can see sort of similar things over there as well. I think at the end of the day, if you're sort of saying, in one sense, assurance is changing, right? Assurance is assuring over complex businesses that are changing, right? So if we are sort of saying we need to do work over that area, then we need to do work over this area as well, or at least assess whether is it still fit for purpose, because the auditors are actually coming and looking at a business, and the CFOs are in the business, right? So we need, and I think I have said this point before, since 2016, the changes we have done to the code are more consequential. So we need to, at the end of the day, look at part 2 and sort of see, is it still fit for purpose? Because 10 years is a long time, and the world has changed a lot in the 10 years. So, I mean, I know, David, I'm very much in support of this project to see, is part 2 still fit for purpose? I mean, that's sort of 70% of the profession. So they also have a right to see that we look at we look at their roles as well.
Thank you, Chana. I don't know if Mukesh wants to respond anything, or if you want to collect other comments.
I'll just make one comment. My apologies if I did not make it clear. When I mentioned and when I did the lit review related to CFOs who are not member of a POA or PAO, it doesn't mean that they're not members of other professional bodies, which could be, for example, an MBA institute or Institute of Directors. So they definitely need to comply with these institutions and the guidelines of these associations. It's only in the instance where they are not member of any organization, or if they have no guidelines coming from the organization itself, that's where it becomes a bit more challenging for non-member CFOs. So I'm referring to a very small class of CFOs who are not members of any kind of professional organization, not just accounting, but any kind of professional organizations.
Thank you, Mukesh. Nancy, please.
Thank you, Chair. David, John, Carla, I really, and Mukesh, very extraordinary amount of work done, and I think a lot of clarity going into this presentation. I think the presentation we just saw really helped distill some questions for me. Not sure that there be answers right now, but I think it's helping me think through as we continue this discussion. kind of getting my head around what the project and maybe potential outcomes might look like. And always delighted to see a fraud risk triangle. I don't think we can have enough of them, because I'm very much, that helps me really clarify thinking about pressures and risks and ability to rationalize an opportunity and all of those things that go into that. And I think that helped kind of distill where my question is coming from, because when you're looking at the PAIB population and how the code resonates with that, I think what I'm sort of questioning now, and again, I don't know that I expect an answer, but I think it's helpful to sort of set the stage for this, is with the expanded scope, and I've heard conversations that CFOs are now HR, they're CTOs, they in some cases the COO, they have all of these roles. They may be the janitor, I don't know, but with all these roles, not all of those roles I think come under the code. I think it's their role related to their professional accountant activities in business. And Shauna, I think you helped articulate that role has changed, right? Is with the development of assurance, and I don't think we're at the end of that. I think we're going to continue to see that. And in thinking about where this lands on protecting the public interest, it's the fundamental principles that are related to that role. I think the other fundamental difference is, and I think this is where Mark may be getting a little bit to, is IESBA can provide requirements and guidance with respect to the PAIB, but not to the organization itself, which is different than how we would set standards or provide guidance for PAPPs. And so that limits, I think, some of these things. So I just am struggling, and I think I'm going to get more and more enlightened as we talk about making sure that as we are thinking about scope here, that we're appropriately thinking about, and I'm gonna steal the fraud risk triangle, thinking about the pressures in with respect to IESBA. Where are the pressures in terms of what we need to do to make sure that these PIIBs, are able to comply with the code? Where do we need to go here? And so really focusing on what those risks are, where we have opportunities, I think, to help PIIBs respond to those risks. And I think, David, what I'm kind of hearing from you, and maybe this is a bit premature, is an ethical decision-making model is probably one of those things. There may be other things, but I'm interested as we continue this discussion to get more clarity and making sure that we're really focused on what is our scope with respect to the pressures that have been identified in these expanding roles. Thanks.
Thank you very much, Nancy. Mukesh, I don't know if you want to respond, or we still have Vanya. Can we collect one or two questions or three, and then you respond afterwards? Does that work for you? Okay.
Yeah.
So Vanya, please.
Thank you, and thank you, Mukesh, for the presentation. Very interesting. I particularly like slide 9, where you show the sources of pressure. And it looks like any of them are temporary ones. They are all there to stay. And so do you have a recommendation how to cope with them as they are unavoidable? At least the geopolitical climate risk, I believe and hope to be temporary, but other than that, the others are there to stay. And what should we do in order to help the profession to deal with this kind of pressure? You are researching the team, so do you have any recommendation for us?
It's a very difficult question, and I'll try my best to answer this question. I completely agree. Some of these changes that we see, the changing landscape, they will evolve. Like, for example, geopolitical risk is important now. It may fade out in the next 3 to 4 years, but it may reemerge. And today we have AI and technology. In the future, we would have agentic AI, and then we would have robotics. And the issues related to having robots becoming an integral part of any workplace. So I completely agree. the pressure points will definitely stay. So why it's important is that even though these issues that we have identified as part of the lit review, the governance issue, AI, technology, sustainability, and we have geopolitics, some of them would go and others would come in. As long as we understand that the pressure is not going to reduce, it's only going to increase. And especially when there are multiple forces in play, that's where the CFO's role becomes more challenging. Now, what can IESBA do? It's difficult for me to suggest any recommendation from that perspective. I think getting more evidence as to what is happening in different jurisdictions, getting more stakeholders involved is what the team is anyway doing through its roadshow and through a lot of engagement with different types of stakeholders in different countries. I think one thing that the organization can do is that the board of governance in an organization, combined with the top leadership, including the CEOs and the CFOs, they need to come together with their external stakeholders and work out how do we deal with these challenges. But I think IESBA is not probably in a position to guide how an organization should function when they have to deal with these challenges. So it comes down to probably at the government level in each jurisdiction where the government has to step in and say, yes, we are dealing with this kind of pressure. And in an instance of such pressure, there is an ethical dilemma the CFO has to deal with. And everyone has to play a role in that to reduce that pressure on the CFOs and equivalent senior finance positions. I think it's working together rather than leaving the CFO at their own mercy is probably the most prudent way to deal with, in my views.
Thank you, Mukesh. Tomoyo, please.
Thank you, Chair. Thank you, Mukesh, for today's presentation and also the project team for this project. I really learned a lot, and there were many insights through this presentation and activities. And so when the project originally started, CFO is a key role for financial reporting and disclosure. And if they are facing ethical dilemma, it sounds like there's something IESBA can do. And everybody asking, so, but CFO is not the exclusive role for PA. And so the first question is, if PA, if PA is in that position, and we have this IESBA code, and the PA are quite have a high ethical mindset because of the IESBA code and also through their experience and education training in ethics and their experience in accounting. And so the question is, such PA, would they be able to do it to play the CFO role better than non-PA and handle that matter, or non-PA, or that doesn't matter. Even non-PA will also anyway face the ethical dilemma. It sounds like me, like again, yes, the PAs are quite strengthen the ethical mindset, and the expectation is that maybe PA can play better this role and handle ethical dilemma than the non-PAs. Then probably like what IESBA can do is really PAs to more strengthen their competency for technology, financial information, and play that role. So then there, I think there's maybe some thing, something that IESBA can play. So, like more let PAs play an active role and take on such a good position. So, if that, so, hearing to all these activities, maybe that's the way we should look into this. If that's the case, maybe that's the way we should look into this project. Thank you.
Thank you very much, Tomoyo. Important considerations therein that I think that we will go back to once we discuss what's next, right? So, David, you wanted to say something?
Yeah, if I can maybe just jump in with a couple of things. So on the question around what are we looking to do, kind of what's the output, I think, Nancy, you raised this question. It's a really important one. That surprises for December. So this is really just an indication of the thinking. It's not a conclusive position, nor are we asking for a decision. So I think a lot of that's going to come out in the next 3 months. But as we go through today, just your questions are super helpful because then we can use the next 3 months to validate some of that. So I just wanted to give that context. I think to the point, Tomoyo, you just raised, I want to make it clear from the project team's perspective, we are not for one single moment suggesting that we should move in a particular PA direction for CFO roles or any equivalent. We're simply looking at the role in general, recognizing that there are very good CFOs who are PAs and there are very good CFOs who are not PAs. So that's not the question. The question is more around the ethical requirements, given the responsibility and given the impact to the market more broadly. That's really the question we've been looking at. So I just wanted to remind the board a little bit about that to hopefully help a little bit, because some of the questions are really super helpful. And in a perfect world, we might do one thing, but our mandate is also quite specific, and there are other actors that might intervene in some of these questions. Thank you.
Thank you, David. Mukesh, I think that I see your hand.
Yeah, I'll add to what David said. And I also agree that I did not mean to say that PAs will behave more ethically and not the non-PAs. What the literature suggests is that there are certain behavioral traits which are unique to certain individuals. So whether they are PAs or non-PAs, whether they have been bound by the ethical guideline or not, is also important. But what matters also, as per the literature, is the individual's characteristics. So the code can definitely inform that. For example, if I have the attitude of committing wrongdoing, and I'm not scared because this is my ethical upbringing, and I can be too opportunistic as an individual, definitely the code can inform me and tell me about what is right and what is not wrong. So the literature is quite clear on this aspect that it's not the PA and the non-PA that matters. It's also the aspect of behavioral traits of an individual CFOs.
Thank you, Mukesh. Hector, please.
Thank you, Chair. This is just that marginal to the project, but I see a lot of reference to the expectations for governance to help. And I think we need to realize that these are not times for governance. These are times for weak governance and gatekeepers not doing much. If you look at the terms of the IPO for SpaceX, governance is on retreat. So if we are hoping that governance is going to help this pressure out of the shoulders of CFOs, I think we are hoping for something that is probably not going to happen. So those governance failures will keep coming. So I wouldn't put any faith on, at least for the next couple of years, that governance is going to increase or that we're going to have any governance charge back to regain accountability. On the contrary.
Thank you, Hector. Mukesh, can we continue and collect 1 or 2 more comments or questions?
Yes, please.
Okay, Sadia, please.
I should also echo the thanks that other board members have given to the project team and for the research that has been done. Dr. Mukesh, I think I heard you say that PAO CFOs are under more pressure and have more guidance. I just wanted to understand that the pressure element on why if you were the PAO, the CFOs were seen to have more pressure. The second question is, you explained about the limited research and the timing of the research. And I want to know whether if there was a second layer, and that is limited appetite for research when it came to CFOs, if that was also a consideration. And it just gives us a broader thinking about this topic, not just from our board, but from other stakeholders. Thank you.
Thank you for your questions. I'll respond to the first question first. So I think I actually did not mean that the PAOs would have more pressure. The pressure lies across all types and all levels, across all jurisdictions, across the whole world when it comes to the pressure because of the changing role of CFOs. Not particularly directed to the PAOs, but of course we can also say that PAOs can be subject to some kind of action against them. That pressure is definitely there, as opposed to a CFO who is not a member of any kind of professional association or organization. So that difference is definitely there. Coming to your second question about the appetite for research on CFOs, that's a fantastic question. Again, this is the fact. It's a fact that when it comes to research by the research community in accounting and finance and management, the CFO is ahead of the CEO, the CFO is below the CEOs, and the board of directors is ahead of the CEOs. So first comes the governance. So a lot of literature in the early years of research and governance was about the board of governance, like for example, board of directors. And then came the CEOs. And finally, the CFOs. So if I have to numerically suggest the kind of research that is associated with CFOs, it would be not more than 25% of the research done on CEOs across the world. So CEOs definitely get more attention. And this is a shortfall of the research community that they have time and again ignored an important role of a CFO when it comes to research. It comes down to the appetite of journals. It comes down to also timing. For example, currently there's a lot of research done on sustainability. I was at the European Accounting Association conference last 2 weeks, and 1/3 of the research was on sustainability, and none of the research within the area of sustainability touched upon the role of CFOs. They touched upon governance, they touched upon assurance, but none related to the role of CFOs. And this is primarily because it comes down to the cost and benefit of conducting research. So if I find it is difficult to publish a research on CFOs, then I would not work on a topic of CFOs. And this is the reason why industry reports and talking to different jurisdictions, people, stakeholders in different jurisdictions through road shows and roundtables becomes more important to gather evidence, which is lacking in the academic literature.
Thank you, Mukesh. Rania, please.
Thank you. And thank you for this, the research and the presentation, extremely insightful. And so, Dr. Mukesh, I obviously, the emerging areas put ethical pressures on CFOs. Obviously, evidently, I'm not debating that. But my question is, or rather my confusion is, when we talk about failures of judgment, I think there's potentially also a component of a failure of technical judgment, not just ethical judgment. So obviously we're talking about emerging areas, technology, sustainability. So sometimes it's just that the CFO lacks the appropriate knowledge or information to deal with the situation. And so my confusion is really, obviously there are ethical issues, there are technical issues, or lackings in both respects. And so obviously we're in front of a situation here. My question is, if we, step aside for a second from our role as an ethics board and just look at the problem, very pragmatically, what would be the best approach? What would be the first order of business? Would you say, first of all, let's tackle the ethical issue, or let's tackle the, the knowledge awareness? For example, it could be when it comes to technology, our work on technology, the staff alerts, how to manage the technology risk, etc. Could it fill in the gap? Or so? My question is, the both dimensions, ethical and technical, seem to be somehow, meshed together. And my question is, what would be the best way to tackle it? And would really, actually, my question really is, would tackling the ethical dimension of it, would it really solve the issue? Or there is other work on other dimensions that, deserves just as much attention, if not priority?
Again, an excellent question. I'll try my best to answer and respond to the best of my ability. Thinking about the pressure that you point and the technical knowledge, the code, I think, is very clear that the CFO should have the competence required for the delivery of the role and to work in that role. So when it comes to competence, the challenge now the emerging role of CFO deals with is constant change and tremendous pressure coming because of these changes coming from issues like climate change, sustainability reporting. Then we have, for example, within climate change, natural disaster. Let me give you an example to help reframe my point. Let's say a garment manufacturer has to buy cotton from the farm, and they have gone to the bank to borrow money. And as a result of the natural disaster, for example, flooding, the crop has been destroyed. Now, a CFO has to deal with the bank to get the loan, but may or may not reveal the truth that the crop has been damaged. This is an ethical dilemma for the CFO. Now, the CFO may have the technical knowledge related to the role of the CFO in terms of dealing with the bank, but the issues that are related to the loss as a result of the disruption in the supply chain, that is an additional pressure the CFO has to deal with, which is not a new pressure, I guess, but the information is becoming more and more public as a result of communication and as a result of media and social media and whatnot. So I'm not saying that our role is to ensure that the CFOs have all the skills required for every aspect of these emerging roles, changes in the role of the CFO. What is important is the awareness that as a CFO, I am feeling this pressure. And as a CFO, I should remember there are ethical guidelines that I should comply with, and I should use my ethical judgment to keep myself away from these pressure points so that I continue to remain ethical in my decision making. So it is more about awareness about issues that are putting pressure on the CFOs other than having that technical knowledge itself. So technical knowledge is part of the competence, which is part of the IESBA code, that as a CFO, I must have the competence. But more importantly, it's the awareness that there is a code, and looking at the aspect of pressure, governance, and opportunity and rationalization, the CFO should feel the strength and feel confident that he or she would not rationalize unethical behavior under pressure. So that part is important. It's more about awareness.
Thank you, Munesh. Luigi, please.
Thank you, and thank you very much for this interesting research. Really helped me in clarifying certain consideration that I had in mind, but with this research, I was able to really get them into a rational way to think. And just to simplify, also considering the board members that already expressed comments, I see that we have very clear in mind now that there are themes and consideration that are affecting the organization, call it corporate governance or internal organization, internal controls, whatever it is. There are teams that are affecting professional accountant in business, and they are the same for those that are not professional accountant in business, but they are discharging the role of the preparer of the information. And it is clear that depending from the jurisdictions, some of these themes or consideration or threats have been dealt with by competent bodies like regulators, legislators, and so on, which has taken actions sometimes in order to regulate the matter and to approve laws and regulations. So now it is clear to my mind that there are areas where we can do a lot, but there are also areas where I don't know what we can do. Probably I am anticipating the discussion that we will have later during this day. But I continue believing that it is appropriate for us to conduct an analysis, and this is what the group is doing, whether the IESBA code is fit for purpose. But at the end, I think it is a little bit different situation compared with the sustainability project that we had, where we were speaking about an assurance type of activity and with an assurance standard, and it was very clear that everyone should work, but the ambition is that everyone should work with the same rules. Here it is a little bit different, and not sure that we can really have a direct impact. On the other hand, I think that we can have an indirect impact, at least. Well, I'm not responding to the first question because I'm still thinking, but I'm pretty sure that we can have an indirect effect. I think that if we decide to, for example, think about NAM or something like that, I'm not responding to the first part I said. They are an agnostic by nature. Everything that could be issued or prepared, even guidance or Q&A or whatever it is, it will be based, of course, on the code, but it could be prepared on a more generic way and without having the possibility to directly address certain matter or directly help the PA in business or the non-PA in business to discharge their role. We can provide inspiration or aspiration that probably it is anyway very important, and it would be a very significant value we can provide for the public interest.
Thank you very much, Luigi, for that very constructive comment and suggestion. I guess we will go back to some suggestions or proposals that are already being made in a direct or indirect way. We will go back to them at some point, and it's good to see that you are starting to see how this project and this work may evolve. So thank you for that. Amajit, do you still want to speak, right?
Yeah.
Yeah. Okay.
Should I?
No, yes, I was just wondering if Hector also wants to speak.
Oh. No, first, a quick reaction on my previous point. So it's kind of helpful to know that we are not rooting this work entirely in a negative space of fraud. So I think that is helpful. And I believe that's a good way to go ahead. My second observation is on So my second observation is on CFOs outside PAOs. And I just wanted to share securities market regulators' perspective there, how we've handled that space. So just to give you an example from India, and this requirement in our corporate governance code has been there for many years, how we define CFO. We have some obligations on CFO, and how we've defined CFO is CFO or whole-time finance director or head of finance by whatever name called. It is not titular, it is functional. And that's what Mukesh's paper also says. When he's using the word CFO, it is more in the functional sense. So on the similar vein, so we say CFO, whole-time finance director or head of finance by whatever name called shall mean the person heading and discharging the finance function of the listed entity as disclosed to exchange, etc., etc. In our Companies Act, a CFO is simply defined as a person appointed as CFO of a company, and under section so and so is recognized as a key managerial personnel. So what I'm trying to say here is that definition is not linked to being a PAO or having certain qualification. If you are discharging that function, you are a CFO, and the regulatory requirements fall on you. So I suggest some further research on definition of CFO around various markets would help. And also our engagement with regulators, I think, can also help in terms of broadening our perspective. And since we already have a number of requirements for CFOs in our regulation, and I dare say, all that we need is just a link to IESBA requirements. I mean, can I say as a regulator, a CFO will also follow ethical requirements prescribed by IESBA, and that takes care of it. Just thinking aloud here, so we need to think through it carefully.
Thank you, Amajit. Tomoyo.
Thank you, Chair. Sorry, Mukesh, you mentioned about the relationship between the governance side, CEO and CFO. So can you elaborate a bit about the relationship between the CEO and the CFO, and how can this impact CFO's ethical dilemma? Thank you.
So thanks again for this question. This is again my understanding, and the literature does not speak a lot about the interaction between CEOs and CFOs, but it is implied that if the CFO is asked to do something or behave unethically or has to make a judgment, the pressure is definitely coming from the CEO who is leading the organization. So the CEO and the CFO literature, there's literature which is related to assurance, where there are a few studies that involve CFOs dealing with the assurance providers. There's less of studies where CEOs are involved with assurance providers because CFOs directly engage with the assurance service. So when it comes to the relationship between the CEO and the CFO, it is probably a bit indirectly obvious that CFOs ultimately reports to the CEO, who then reports to the board of directors, depending on what type of organization. So the CFO probably would be taking orders from the CEO. But the evidence in the literature does not directly suggest that CEO is directing the CFO to do things in a particular way. And as a result of that, the CFO is taking that pressure to behave unethically or behave ethically. So there is no such direct evidence in the accounting and finance literature. In the organizational literature, of course, there is evidence to suggest the CEOs and the CFOs being the top two most important roles in any organization's executive, they are definitely playing an important role working together. So I would conclude with that comment.
Thank you very much, Mukesh. Very clear. Thank you.
Thank you very much, Mukesh, and board members for your very many and important questions and comments. We had a mix here of questions and requests for clarification, which you dealt with masterfully, but also already some suggestions. Some of the board members, I think that they already started giving indications about how the project team and the work stream may look at the future work. And you yourself, Mukesh, I think that you contributed largely for that. I'm going to pass to John, who I think wants to make some remarks with respect to everything that we heard.
Yes, thanks, Gabrielle. I just wanted to address a few points, one from Chana, Nancy, Rania, and Amajit, if that's okay. So Chana, you mentioned around analysing whether the code remains fit for purpose. So we have been exploring that with all of the outreach activities. The challenge we're facing, and which will come out a little bit more today, is that CFOs are not really directly using it. So it's very difficult for them to say whether or not it's fit for purpose. The JSS feedback was that it is. This was at the May meeting. But what we intend to do between now and the final report is do our own line by line analysis of part 2 and have a look from all of the stuff we've learnt and find out whether there are any issues or gaps. So that'll come into the final report. Nancy, you made a point. I just want to clarify this because I think it's quite important. I think you said, and if I've got this wrong, please correct me. But I think you said that the code would cover, because of the role has evolved so much, so it's bringing in, say, strategy, technology, various other things. But I think your comment was that the code would cover the financial aspects. But I think when you look at our definition of professional activity, which is what the code will apply to any professional activity, which is requiring professional skills undertaken by a PA or a sustainability assurance practitioner. So in my mind, it means any activity they're undertaking in that role is covered by the code, irrespective of whether it's financial or not. As to whether the definition covers that adequately, I think that's a very important question. So that was that. And then, Rania, your point about...
Sorry, John, I think that Nancy, from her body language, wanted to say something.
Yeah, of course.
Well, you said he wanted to clarify, so I wasn't sure if I was supposed to respond. I don't know. I think that in my mind was something that I was looking through the materials and certainly in the presentation, I started to think through, well, and I'm going to use a ridiculous example. If the CFO is also the janitor, in their role as a janitor, does the code cover that role? And you may say yes, that may be accurate. I'm just processing, is that the right answer? And thinking, because I'm really thinking about what are our risks in terms of protecting the public interest, in particular in those roles where it makes a difference, right? And I know that cybersecurity was mentioned. I'm not quite sure that that's in scope, but I'm still very much, John, kind of processing and getting my head around this, because I do think it's really important as we step back is that we really focus on what the risks are for these CFOs and how they relate to IESBA's responsibility in protecting the public interest in order to drive to what next steps look like. So thanks.
Thanks, Nancy. Back to you.
Thanks, Nancy. And then, sorry, yeah, Brian, your point about technical skills and ethics, what should come first. I think this is one of the things, we've been talking about, a lot of what we're finding is there's impacts on us, but also the broader ecosystem that incorporates this. So if you think about that from the top down, the role has changed so much, but are PAs being educated sufficiently to do that role? Is the profession stepping them up to be ready to do that role? So that's possibly a question not for us, it's for the broader accounting profession. But it's a very relevant point which has come out. And like we were saying, there appears to be a drop in the percentage that are from the profession in the CFO role, and that they're often coming from other channels, so MBA, whatever it is. So yeah, it's a very important question. Amarjeet, your point about the rules in India, that's another thing we want to do in the next few months, is to do a bit of a gap analysis, in particular in the jurisdictions where we've had outreach and we've heard things, is to understand where there are regulations, et cetera, that cover those aspects and whether there is a gap, and just as you mentioned. So I just wanted to point that out as well.
Chana, please.
Just to, on the JSS, John, you have to be a bit careful because not all JSS has a mandate or part 2. I mean, I think nearly half of the JSS only look after audit. So you have to be careful that, they don't, some people do not have coverage of part 2 of the code.
Thank you, Chana. So, project team, David, David, please. Oh, I didn't. Obi, please. I'm so sorry.
Thank you, Chair. And I'd like to salute the project team for this great work, and also Mukesh for your research. So the paper was very educative, and the triangle was very apt. And I just want to point out the fact that this CFO project can be a very strategic project for IESBA, given that it doesn't only address the PAIBs, which have more population, but also addresses the PAPs, because each audit firm, each auditor, they have CFOs, and they also face pretty much the same pressures and issues, all these things that were shown in that triangle. So it affects everyone. And from what we have seen and from what everybody has said, we see that there's really a gap of visibility of IESBA. Most people don't actually look at the standards, which are very fit for purpose, as has been established. So this is a great opportunity for us and a very good opportunity for us to push our value proposition through this project. So I think it's very strategic and one that we should amplify, because it helps us to amplify the value we bring to the accounting and finance ecosystem, and which from the paper shows that there's really a gap in academic and even in guidance, as it were, but IESBA fills that gap. So I feel that it's a call, because it has to do with both the adoption and implementation exercise that we do, the firm culture, the technology, everything. So this is just like something that is holistic for us. So I just want to lend my support for this project, and I hope that we'll have to do more stakeholder engagement to push our value proposition and show the value we have, so that we'll not be having the comments like what we had yesterday, people saying, oh, your code is not being adopted. It's because people are not aware. It's not that visible, or people have forgotten. So we really have an opportunity, and even thinking on further for the non-PAO members, people that are not member of any PAO. It's an opportunity, because if you go to regulators now and they see the value of the standard, you can see Security and Exchange Commissions now putting up some, if they can embrace our code as part of something that will guide the CFOs, because the CFOs have a very important role to play as the first line of defense before you get the auditors. If the CFO is not being very ethical from like what we've seen, given the evolving rule, things can go wrong. When the auditor comes, it complicates more work for the auditor. Before you know it, there's a failure. Because if you look at the trends of some of the failure, it starts with the CFO and the CEO colluding. And then when the auditors come, they are giving them wrong information, creating more work for the auditors. So if we can be able to plug this opportunity, I believe that the code visibility will be largely improved. And also I'm beginning to see an opportunity, or not an opportunity, but something I've always had in mind, and based from the work we do with the International Ethics Conference for Accountants, I'm seeing from the research, when he was talking about the principles, Mukesh included accountability, which is not part of the fundamental principles. And even from the firm and culture governance, we see accountability re-echoing. And I'm beginning to see that maybe in the future, we'll no longer have 5 fundamental principles. It might become 6, because the accountability, I think there is now a case for it to future. Thank you.
Thank you very much, Obi. Mukesh, please.
I'll quickly respond, and thank you very much for your encouragement and for the support of the project. I really appreciate your comments. I'll give an example of my own self, and the aspect that you touched upon is related to awareness. So the last time I read, I'm bound by the CPA Australia Code of Conduct, being a member of CPA Australia. I read the content of the code in 2021 after many, many years, and that too because of a different reason. So I'm aware that many of the professionals in finance, CFOs and whatnot, they have either no idea that the code exists, or even if they know, they may not have looked at it for many, many years. So this opportunity to engage with the stakeholders and make them aware and educate them about the existence of the code and the importance of the code and what is relevant in the current climate is quite an important initiative of IESBA. Thank you.
Thank you so much, Mukesh, once again. I would have some considerations, but I think that I will leave them for the end of the discussion after the second part of this discussion on the topic of CFOs. But I'd just like to highlight the fact that from this presentation, from Mukesh's research and from the discussion that we had here, that there are already some ideas that we should bring forward for the next conversation, and surely forward to September and not December. I need to make this clear. Sorry, David, but you know that these things cause a big impact on me. So we need to bring some ideas forward. But I don't think that no one took this with or started this project or is taking this project with negativity or thinking that there is a terrible world around or that the CFOs are doing a terrible job. I think that the conclusion is obviously that they are under a lot of pressure, and that the nature and sources of pressure is changing, which of course can be problematic, but there is no evidence that there is a big, they are under pressure, and that this creates a risk, but we are not saying that the world is falling apart. This idea that, well, that's just how things go. And I'm referring specifically to your comment, Mark. Well, that's life. What can we do? Well, I don't think that as a board we can necessarily take this approach like that's life. Everything is happening and we just move. I'm seeing you smiling. Of course, we cannot solve all the problems. That is very clear. And it's very clear that what is being done here, and that Mukesh very much helped already with his research, is trying to understand if and what can with our small piece of contribution to help with something that we see to be challenging. Let's put it like this. Not saying that we are going to, or that it is our intention to go beyond our mandate and try to solve the world. And this brings me to the point of governance, that there is a governance issue, and I think that became also a little bit clear in this presentation and considerations. We are not planning to solve the governance problem in the companies, and that's not our job or our remit, but recognizing that it exists forces a question to the IESBA, which is, if there is a problem in this context, can we do something? Not to solve the governance problem, but to solve the problem that problem helps causing to the CFO. So we need to be very clear, because there may be some perceptions that we want to do the job of others here, and that's not the case. Now, I'm going to stop here for now, because I would have much more to say. With some suggestions that appeared here directly or indirectly. There was something that said by Rania that I'll probably go back to that, because as I was listening to the conversation and seeing the presentation, it becomes clear, as I said at the start, that there are a lot of links with other things that are relevant for the IESBA: sustainability, farm culture and governance, ANI. And when later today or in September, we decide what to do with this project. Maybe this can be relevant, because there are many ways of addressing these things, and it may also, well, I'm not going to say exactly what I have in mind, but this may put an option in front of us of how to address this. So we will break for now for 30 minutes. And come back at 11:30 for the second part of the presentation. Mukesh, thank you dearly. And I'm sorry, because I know I suppose that you are in Australia, in Melbourne. So a big thanks to you, because we know it's late. And thank you for the generosity of your time with us until so late. Of course, you are very welcome to stay for the next part of the discussion, but I suppose that you have other plans for tonight. So thank you very much and hope to see you very soon.
Thank you, Chair. I really appreciate and I'm grateful for you and the board members for giving me this opportunity to engage with the IESBA board. Given the time difference, it's 1 a.m., so I'll take a break now. But I hope to come back and engage with the IESBA in the future. Thank you once again for the opportunity to everyone.
Thank you and have a good rest.
Thank you. Goodbye.
Thank you, Dr. Mukesh. The
Thank
agenda
you.
actually said 20 minutes for the break, and I'm conscious there's quite a bit to go through, John and Carla. So unless you're comfortable with,
I think it should be fine, Ken. We could go the 30 minutes.
30 minutes,
I think a
okay.
lot of the issues and questions have already arisen,
Okay.
but yeah.
Okay, so let's come back at 11:30 then.
Okay. Welcome back to this second part of the discussion on the CFO project. We have 1 hour, and now I have put my glasses to see the time right, to check the time, so we should finish at 12:30. And I'm going to give the floor to John and Carla for the next part of the presentation.
All right, thank you, Gabriella. Just while we're waiting for the slides to come back up. Yeah, so the next part, we're just going to go through the outreach findings. First of all, we'll talk about the outreach findings from the stakeholder engagement outreach activities, the roundtables, focus group meetings. And then after that, Carla will go through the extended survey results. So, are they coming up? Yeah. Sorry, bear with us a moment. Here we go. Okay, so in terms of the outreach findings, so some consistent themes pretty much across all the geographies and the sessions that we had. Consistent confirmation that whilst the CFO's core, like stewardship, reporting, control, finance, that all remains as it is or as was, but as a percentage or proportion of the role, it is significantly less. So there's been a significant shift into responsibilities to strategy, technology, sustainability, risk and leadership, enterprise leadership. Often the CFO is referred to as the co-pilot to the CEO, and in some instances has been referred to as being just as important as the CFO as well. Ethical issues, they're not really new ethical issues that are coming up, or some are slightly different, but what is, I mean, there's still around things like judgment, discretion around reporting, pressure coming from various stakeholders, conflicts of interest, managing short-term versus long-term goals, those sorts of things. But what is coming out as a concern is the speed, the complexity, and therefore the ability for the CFOs to respond to these issues under extreme pressure. The IESBA code, we've sort of touched on this already. The principle-based framework continues to be seen as very relevant, and I already mentioned around the JSS comments around that. However, there's definitely questions around visibility, accessibility, and practical application of the code by CFOs. In terms of ethical outcomes, we think there's something that can't be looked at from an individual CFO perspective. And again, whilst we're not trying to solve governance issues, it's very clear that ethical outcomes are shaped by the organisational culture, the tone at the top, the governance and the ownership models and other factors. So it is definitely something that's impacting, or it's an amplifier of ethical challenges and issues. In the public sector, yeah, that's clearly coming out that there's additional aspects around corruption, political influence, and also diffuse accountability frameworks, which is impacting ethical issues as well. How has the CFO role changed? So they're no longer seen as just the finance steward. It is still a core function, as I mentioned, but it is only a proportion of the role. CFOs are now considered strategic partners, like I said, co-pilot to the CEO, also the organisation's ethical compass. They're required to put input on strategy, capital allocation, sustainability, the operational aspects, also around organisational value. Sometimes we've been told that there's a shift towards being a value architect, or even this idea around being a chief value officer. A lot of similarities across jurisdictions and entity types, but there are some nuances that we've seen. So larger entities, for example, CFOs may have access to specialists, for example, in sustainability or technology, whereas in smaller entities, the CFO may be required to cover a wider range of responsibilities and then with fewer resources. One thing I guess that's come out, which is quite an interesting finding or issue that's come out, is in a number of jurisdictions we've heard about that whilst the CFO role has evolved and it's expanded and it's taking on different functions and responsibilities, that the organisational structures are also sort of evolving in a similar way as well. So what that means is, in some instances, we've been told that there's more prevalence or more importance put on the controller, so the person underneath the CFO, or in the US context, I think they're called the chief accounting officer. So they have that higher sort of importance within the organisation in relation to that financial stewardship aspect. And therefore, the CFO is more dependent on that controller. So we've heard about when they're recruiting that they really make sure they get a really strong person in that controller role or the chief accounting officer role. Okay, the ethical challenges. So the main issues that have been identified by the CFO are really those grey area decisions where the answer's not immediately clear, the facts are incomplete, the data's incomplete, or the expectations that are put on them are in conflict. In particular around AI outputs, for example, or sustainability. A common theme that is this distinguishing between what's legally defensible, what's technically compliant, but also commercially expedient, and then also what is ethically right. So there's also a tension as a result of that between having to support strategy, protecting the organisation, but also whilst maintaining objectivity in terms of that stewardship aspect. We've also noted that from the activity or the outreach activities that often participants would not readily identify things as an ethical issue in real time. However, when you talk about it more in a contextual basis or through an example, that the participants start to realise and see that there is an ethical element to this. So what we think this is creating is a potential recognition or a delay issue, because it's sometimes instead considered to be more operational or a legal or a regulatory issue without immediately seeing the ethical aspect with relation to that. But like what we're saying is that when you actually talk about it in that context, that the participants were more readily able to see that. Another major theme that's come out is around the multifaceted pressures or multiple pressures or sources of pressures and the conflicting expectations. So these expectations can be coming from the CEOs, the boards or shareholders, the founders, or government or regulators, auditors. So there's all these various different expectations, but they sometimes can be in conflict. There's also issues around potential conflicting responsibilities. So the idea around being a steward, being the finance steward and being the safe pair of hands for an organisation, but at the same time being responsible for strategic growth of the organisation or an enabler of commercial ambition. So in terms of why pressures are becoming harder to address, so clearly, and you've already heard this morning, that pressure has been a central feature of the evolved CFO role. Again, it's not necessarily something that's new. Pressure, it's obviously addressed already in the code, but it is the scale, the speed and the concentration of pressures. And again, we think this is impacting the ability to recognise ethical issues potentially, because time pressure has been repeatedly brought up as a problem. And not that it in itself is an ethical issue, but it does definitely amplify threats. Again, the current volatile global environment was consistently raised, and again, that's adding pressure to the CFOs in their roles. The pressure is not just around financial reporting, it also impacts things like sustainability reporting, technology, and also the other responsibilities CFOs have taken on. And as a result of this, that pressure is potentially impacting professional competence and due care as well. Role concentration. So some CFOs have highlighted the effect of role concentration. So they're being financial stewards, strategic advisors, operational leaders, risk managers, technology sponsors, and also sustainability leads. CFOs also in some instances are acting as the CFO and the CEO or the CFO and the COO, especially in smaller organisations. And some participants have raised that this does create a conflict of interest because, and then maybe the safeguards that are normally there, things like segregation of duties or independent challenge or specialist review could be weakened in those situations. So in other words, whether there is a conflict between making a business decision and then being expected to challenge whether it's financially or ethically effective. So having to make the decision, but then also having to challenge it at the same time, creating that conflict. Culture and governance, yeah, not surprisingly, this has come up as highlighting or impacting ethical responses and outcomes. So things like tone at the top, the CEO and board providing support, the influence of investors, the effectiveness of escalation mechanisms, all of these things are impacting the ability for CFOs to address ethical issues appropriately. So again, not trying to solve it, but it just has come up as something that is impacting the response by the CFOs. Company codes and governance frameworks are also often identified, but often people have said that they're not sufficient to substitute ethical codes. I won't go into incentives because Mukesh has talked about that quite a bit. Similarly with technology and data, he's covered a fair bit of that as well. But similar themes have come out through the outreach activities as well. Oops. So in terms of ethical leadership challenges, so the ethical leadership, again, we don't see this as exclusive to those that are professional accountants in business. We think this applies across the board. There is that expectation for PAs and non-PAs, but we do think it does identify a potential accountability gap. So as we've mentioned, roughly 50% of CFOs are from outside the profession. If they're inside the profession or a member of a PAO, they're obviously subject to a code of ethics. They're subject to CPD, and in some instances, or many instances, that includes mandatory ethics training. And there's also monitoring and potential sanctions that relate to those. So those that are outside the profession, as Mukesh mentioned, they may be members of some other professional body and have similar things, or but also often they're subject to the company codes. We don't see the company codes as being equivalent or as stringent as the professional ethics requirements or disciplinary mechanisms that come with membership of a professional accounting organisation. So again, we're not saying that they're less ethical, we're just saying that there is a potential difference between what they're required to do or what they're required to comply with. So that has come up from a number of stakeholders as to whether that's creating a level playing field issue. There was no suggestion in that the requirements for those in the profession, so PAIBs, there's been no suggestion that the bar should be lowered for them, but maybe that the bar should be raised for all CFOs for consistency. In terms of the use of the code, we have, like I've said, quite often it's that the CFOs have not really been directly using the code to address ethical issues. But in saying that, we definitely had some very concrete examples of where the code was used as a reference or a shield in terms of a particular ethical issue that was being faced with, and being able to use that and present that to the board or to the CEO in terms of why something cannot be done from an ethical perspective. So there was some definite examples of where that came up. In terms of the ecosystem, there were questions around enforcement and mandate for non-professional accountants. It was also recognised that CFOs did not make ethical decisions in isolation. And there were a number of stakeholders that brought up that these ethical considerations should be understood, not necessarily applied, but at least understood more broadly across the C-suite and also even within the board, etc. as well. Jurisdictional differences around CPD, we definitely have had examples where CPD is a mandatory requirement in relation to ethical training, is a mandatory requirement. but it's certainly not consistent across jurisdictions. There's definitely differences there. And we think that this is, potentially an issue that needs to be considered from a broader ecosystem perspective. In terms of challenges regarding the code awareness and accessibility, so there was limited examples of what I did just mention, those couple of concrete examples, but they were quite limited in terms of the actual use of the code to address real-time ethical issues. It was also pretty clear that CFOs were unaware of relevant code revisions, which I mentioned earlier. So things like sustainability, tax, technology, role and mindset, all of those sort of more recent standards, which are quite relevant to PAIBs, were not known by the CFOs. So yeah, again, not current use of the code. Often it was the last time they looked at it was when they were doing their qualifications. There was a lot of mention around accessibility issues. There's a perceived concern that the code is extensive and therefore difficult to navigate. It's hard to sort of reconcile that against the outdated use or the limited use of the code. But it was certainly raised as an issue, and also around the lack of digital access to the code as well was definitely brought up. So also around the practical gap, definitely a disconnect between the existence of the code and the actual use of the code and the application of the code. Certainly came up very consistently. Feedback around enhancing support. So across the CFO and other stakeholder sessions, participants consistently highlighted the need for more practical support for CFOs. So listed up there were some of the examples that were brought up in terms of how that could be achieved. So around concise guidance, so providing clear and brief instructions for ethical decision making, real world case studies or scenario-based learning. Digital tools, so having more bite-sized and accessible means to understand the code or how it applies in particular situations. Peer networks was also around fostering confidential spaces for CFOs to share experiences. It's certainly something we heard quite often from the CFOs about how even the actual activities that we undertook, those outreach activities, that there was a really great opportunity for them, and it's something where they have not really had the chance to be able to talk at a peer-to-peer level around the issues that they've faced, and they found it as a really great experience, to be honest. So and that was a good finding from that. So they were the main things around enhancing support. And then just the last slide before we have a break for questions and comments, just some specific issues that were raised from different perspectives. So from the investor lens, there was some views shared that where there is weak finance leadership or limited ethical grounding or poor control discipline, it can actually impact investment risk assessments. There was a regulatory lens. This was more so in the Hong Kong scenario, where it was around the finance function, where the quality of the finance function, whether that affects the ability to close the books, whether there's poor controls, suspicious transactions. All of these things were concerns from a regulatory perspective. And then public sector, we've sort of mentioned before, but there's issues around corruption, political influence, having control over public money, and also sometimes there being weak escalation channels that may affect the ethical decision making. So maybe I'll just pause there and just see if Carla or David wanted to add anything before we go to the questions. Okay. So we'll just pause there and just see if there's any questions or comments from the board in relation to the outreach activities and the input we've received so far.
Thank you very much, John, for the presentation. Mark, please.
Thank you. Again, I think, really helpful in reinforcing the critical importance of governance here, because it seems that so many of the problems that you're identifying, or so many of the challenges you're identifying, are as a result of poor governance. I have got one sort of question which maybe hasn't come through yet in the research, and that is there was a report by one of the big executive search firms recently, and they said that in the UK for FTSE companies, the average tenure of a CFO was 3.7 years. So, you know, we're talking about a comparatively short period of time. It's significantly shorter, for instance, than the average tenure of a CEO. That said, it did also say that there was high market demand and lots of demand for experienced CFOs, so a highly competitive market. But I wonder to what extent some of the problems that you've identified or some of the challenges are exacerbated by that short tenure. Because in a sense, you have all of the issues that you've identified, and the fact that you haven't really got that long to address them before perhaps you might be moving on to another role or something else. I think it's also interesting that in the same report, it makes quite a lot of the fact that certainly, again, maybe from a UK perspective, the CFO role is the sort of takeoff point for CEO. And a lot of our CEOs may have previously had CFO experience leading to that sort of throughput. And also perhaps, you know, a reflection as to why the CFO, above all of the things that would be linked to their role, is involved in more strategic business decisions and, you know, dealing with some of the significant issues that perhaps are broader than just dealing with the finance function and financial reporting and management. Like, it's interesting as well, we've got the 100 group in the UK, which is a peer network for CFOs in the largest companies. So I can see the benefits of that. And it will be interesting to see, you know, what pockets exist out there more broadly in the market that actually are providing some of the options in that sort of enhanced support slide that you showed us.
Thank you, Mark.
Yeah, thank you. I'll just have a quick comment, Mark. Yeah, so that definitely came up in Latin America as well. The tenure, like I think they said 3 years was the general tenure for CFOs. So similar thing from what you're saying from that report. I guess the question is, I mean, apart from like you're saying, it's a takeoff potentially into CEO, because we've heard that as well. But also, I guess, what's the underlying reason for the short tenure? And maybe part of it is to do with the pressures and the issues that they're facing. I mean, this is just my conjecture, but yeah, there could be that as well.
Thank you, John. I had the same question in mind. One thing is the fact and the numbers. The other thing is the reason. Might be the pressure, but if they move to another company, they will probably face similar problems unless they decided to change job to do a different thing. It would be interesting to go a little bit deeper into these numbers and understand why is it so. John, please.
Thank you, Chair. John, I'm interested in the points around CFOs don't read the code. They probably haven't looked at it for 10 years or more. On one level, that doesn't necessarily concern me, but I guess what I'm interested in is where are they going then? Are they going to the Institute of Directors codes? Are they going to other places for their ethical guidance? Because the reality is that our code is just one of several. So I don't know whether you've got any context you can provide on that.
Yes, I can, and David or Carla jump in as well. Often we would talk, well, those that were from the professional accounting background often mention like that all of that stuff that they might not have looked at it in 10 years or 15 years, but all of that's still very much ingrained in their psyche around at least the basics, the fundamental principles, the conceptual framework. So yes, that was still there and that would still be part of their thought processes. However, a lot of them just said, we just deal with it based on gut instinct. Honestly, like that wasn't like they were going anywhere to find what the answer would be in terms of how to address it. And also the fact that it's happening so rapidly, and so like there's so many things to deal with so on such a frequent basis that there was no time for them to actually go and look at something in terms of that. So that's my take, but I don't know if Carla or David, do you want to add anything there?
Maybe I'll add one thing. So the other example they gave is they go to friends. Now, friends is a really wide topic, and you could say, well, what kind of friends? And so that there was some outreach that was done between. So keep that in mind. But the one thing I wanted to add to Mark's comment on if we talk about the FTSE 500, for example, CFOs, they don't get to be CFOs right out of university either. They've been CFOs before. So I think it's the tenure on a FTSE company, which comes back to the point that Gabriella raised around and John raised around why did they leave? Because there is a different expectation with a publicly traded kind of top 40, top 50, top 100 company versus, for example, a medium company. And keep in mind, they don't just go there out of university. They've had years of experience before they get to that point.
Well, that would be interesting to explore as well. But and with respect to your question, John, if they go to they use other codes or whatever, I think that we had an interesting discussion and evidence at the start of this project here, namely with respect to the other codes that many times are mentioned by them, by the G100 and etc. That there are a lot of things that they can use. Still, we had some examples here that the project team brought to the room, which were very interesting, where you could see that their concept of ethics is not exactly the same thing, because they are focusing on different areas and different objectives. I remember that there was one code of ethics of an important company, one of those brought here, where the most important ethical duty was, it wasn't said this way, but it was like, is to make money for our shareholders. So it's very much based on the objective, on the goal of the company, and aligning the work around that goal, less than on professional ethics, which is what we care here about. So assuming that one thing replaces the other, I think that reality is very, very nuanced in terms of the codes of ethics and codes of conduct in companies are extremely different, and usually, from what I know, based on a little bit different things. I think that there are some principles like confidentiality, for instance, I think that should be there more or less, and things like that, but then it's different. Ken, please.
Thank you, Chair. I just thought I'd maybe share a bit of what I took away in the conversations I participated in some of the outreach activities. We had the opportunity to engage with some CFOs, for example, in Asia, in some countries in Asia. I was also in the New York Roundtable, for example. So first of all, there's a grain of truth in the observation that many CFOs essentially have a gut sense of what it means to act with integrity. In other words, to do the right thing. And therefore, they would essentially anchor their thought process to that overarching principle, if you will. And as a result, they won't necessarily feel that they won't feel an impulse to turn to the code, or even to be minded to really just very deliberately go to the code, or even go to their internal corporate code of conduct, right? So it's more that the sense I took away is that more that they would act on instinct, especially if you're trained professional accountants, they're qualified, etc. They would have at least gone through that process of really understanding the ethical expectations that apply across the profession, broadly speaking. So all to say is, yes, first and foremost, they would act on impulse, understanding the broad overarching expectation to act with integrity and to do the right thing. That said, maybe there's two additional dimensions to bring into the picture here. One is this very challenging dilemma that many CFOs face in practice, which is how do they meet the pressure when the interests of the company are on the line, or when the objectives of the CFO are on the line. And very, very often, that's really what they were sharing in conversation with them. They were saying, really, when it comes to the pressure point, we have to choose. Do we stay loyal to the company? Do we continue to promote the commercial interests of the company? Or do we, in fact, go against the grain simply because, well, our code now has those expectations? And if we have to really adhere to those expectations, well, that's going to go against essentially where the company needs to go. Really, so that's a very difficult dilemma, as we can appreciate. The second dimension is the context matters. Where the CFO actually is working has a lot of influence. And the example that was given to us, or at least as in one of the conversations we're in Asia, there was one CFO who works in a highly regulated field. I think she came from a telco company, and the space of telecommunications is, that's a field that has a lot of regulation, and there's a lot of scrutiny in terms of how companies essentially, advance their commercial interests, etc., because as customer interests come really front and center. So in that context, what the CFO said is, look, the fact that we operate in a highly regulated environment in our context actually has a very significant influence in how we behave. And that really was quite a contrast to other CFOs who were not in a similarly regulated field, and they didn't feel, let's say, that sort of dimension of, well, we have to be really mindful here that it's, yes, we understand that there are ethical expectations, but yes, there is also that overlay of regulation. We are actually overseen, we have to be answerable to our regulators. And therefore, that's really kind of keeps us on a straight and narrow. So that's, it's a very complex picture, as we all appreciate. And, how CFOs feel under what circumstances actually turn to a code of ethics is, how do we build that bridge is really, I think, is really the big question for this board to address.
Thank you very much, Ken. Amarjit, please.
Thanks, Chair. So first, I just wanted to compliment for presenting these outreach findings. I think they're very interesting, and you put them in a very structured manner to give a good sense of the landscape, which is evolving very rapidly. So my question was, during our interaction, did we get an impression or was a need, let me put it this way, was a need or demand for some standards or guidance expressed by the people we interacted with? Or maybe we did not ask them directly, I don't know. Or did we get a sense of what is the appetite for more work in this space?
Thank you, Amarjit. Can we ask Sadia as well, because I'm a little bit mindful of the time, and then you'll respond. Sadia, please.
Thank you. And maybe it's good that you asked me, because I was going to say something alongside what Amarjit said. On slide 20, we have this challenges in code awareness and accessibility. And I know the project team still has one slide before. 120, the next one. I know the projects team still has work to be done and there's still further outreach, but I wanted to know how widely spread and what percentage of our CFOs were actually in this bucket, where they had an outdated use or lack of awareness. Because I know there's a tendency of saying these are new issues, we need to look at it. But I would really want to go back and see if their issues are not already dealt with in the code and it needs for more awareness raising or more understanding. I think that analysis would be really helpful so that we understand where we are on this project.
Yeah, so just on your question first, Sadia, that was, I would say in the 90% that were not, hadn't looked at it in a long, long time. There were those specific concrete examples where it was specifically used in an actual example, but that was very low. And back to Amarjeet's question, so yes, there's a lack of awareness, but there was also a could see the value in the code and what it brings and how it could assess or assist them in dealing with ethical issues. It's more around, like we were talking about, visibility, accessibility, and being able to use it in a practical sense. So there was definitely a request for support, which is that next slide. There was a lot of requests for support, but it's just in different ways than what we do it now, essentially. So they could see value in the code and how it could assist them. And in particular, like when we talked about the new standards on technology and sustainability and how that could impact, because the context is different, the principles don't change, the conceptual framework doesn't change, but the context in which you're applying it does change. And they could see that and understand that, but it's just something that they're not aware of, whether that's, so they want to be aware of it, but it's just got to be done in a different way, I think.
Thank you, John. Vanya, please.
Thank you. Thank you for the presentation, John. I was just wondering about the short-term period of a CFO, as Mark commented, if it was not a consequence of the agency problem, the difference between expectatives in the long and in the short term. Shareholders want high profitability in short term. And so not necessarily the ways to get this high profitability is of the best one for the company. And so that's why they have so short-term period in their position, because they are not able to deliver, or sometimes in order to deliver, they elect options that will be against the code and then will represent a threat for us because they will not act under the better knowledge of them, but rather in the short-term necessity to provide high profitability. And so that might be one explanation for this very short period as a CFO.
Thank you very much. Can I give the floor to Rania?
Yeah, of course.
Don't you mind? Because I'm seeing the time flying and we still have a lot of slides and important things to go through. So Rania, please, if you could be short and sharp.
Yeah, very quickly. I just wanted to ask you, so when you're looking at the challenges, or perhaps this is what you plan to do in further analysis, were you able to narrow down, for example, or to sort of like get some sort of glimpse into which challenges are more relevant to PAs versus non-PAs, or PAIBs versus non-PAIBs, just to, sort of figure out, start narrowing down, pinning down the problem, whether the issue is more related to those who are supposed to be well versed with the code versus those who not necessarily, are educated about the code. So just a question.
I'll just briefly respond to those couple of questions. So Vanya, just on your point around...
Sorry, John. I see Obichukwu has just raised her hand. Obi, please, if you could keep it short. Thank you.
Thank you, Chair. Okay, I just want to point out in slide 19, there was a point there on PAIBs are subject to the code. So I'm just trying to say that I think we should be worried about saying PAIB CFOs subject to the code, because actually all CFOs, including PABs, they are also subject. PABs CFOs are also subject to the code. I just wanted to point that out, and I just wanted to ask if NOCLA was kind of brought up during all these discussions with the CFO. Thank you.
Thank you, Abi.
Okay, so sorry, Vanya, back to your point or question. I mean, your point is clear that may be impacting the tenure as well, but just wanted to note that did come up quite often around the trying to balance short-term goals against long-term goals, especially if you think of it from like the sustainability perspective. There might be pressures to meet, whether it's financial goals in the short term or sustainability goals in the short term, but in terms of the longer term sustainability of the company, that does create challenges. So that definitely came up. It also came up in the context of like startups as well, and also like private equity type investments in organizations in terms of the short term versus long term, and I think trying to reconcile the longer term ethical aspects against that shorter term focus. So that definitely came up. Rania, to your question, yeah, we'll look into that. I mean, the actual challenges should be exactly the same whether you're a PA or non-PA. Like the ethical challenge, I guess it's more around how you identify it and deal with it. The only problem with that, we did have only maybe 10 non-PA CFOs that attended the roundtable. So it was, in terms of, I think 120 or thereabouts, so it was only like maybe less than 10%. So in terms of that, we do have some information on it, but it's probably not as fulsome as yet. But we can certainly cover that off in the report as well. And Obi, yeah, so that reference there to the PAIB is just obviously the PAPPs are subject to the code as well, but we're just saying, obviously, if you're in business, if you're a CFO, you're in business, so therefore, yeah, you're subject to the code. That was all we were trying to state there.
Okay, thank you very much, John. There are no other comments or questions, so please, Carla.
Thank you. After this morning's rigorous discussion, at this juncture, the points the project team would like to raise is almost repetitive, but at this point, we do have some numbers to back us up in some of the discussion and findings that we've had. So if there is anything I would like to highlight to the board is 7 key messages. We hope that project team hopes that the board will walk away with these in mind. As Gabrielle mentioned this morning, the project team conducted 2 surveys, one last July to navigate and understand the landscape of CFO role and ethical dilemmas that they go through. It was over a short period of time, over the summer for 4 weeks, hence the response rate was a bit lower, and the project team thought it would be more fruitful for us to extend that survey, and we launched it February this year. And the closing date for the extended surveys were April 24th, although the project team is of the view as we are still undertaking consultation with stakeholders in Australia and upcoming meeting with the UAG, we kept the surveys open in case we do get further feedback from our stakeholders who like to provide those feedback anonymously. So the first point I'd like to share with the board is that the survey base has gone broader and it is indicative. It is not a global representation of the discussions we had or a global representation of the findings globally. It is directional. And the CFO survey had a full completion rate of 45%, whereas other stakeholder survey had 16%. The CFO survey also remained weighted to a certain jurisdiction. As seen in last July, it was weighted to Italy. And then for this round of the extended surveys, it is broader spread. It is still weighted towards Italy, but we do have representation from the G20 jurisdictions such as Japan, Argentina, and Australia. We did launch the other stakeholder survey this year as well, which we did not do last year, and most of the responses were weighted towards PA responses. And what we've heard and what we've been discussing this morning is that the clearest finding that the CFO role is definitely and has broadened. CFO respondents themselves reported that the expansion has gone into risk management, compliance, and internal controls. And yes, I could hear Mark saying, so what? This has always been the environment that we lived in. Very true. But there is a huge acknowledgement that there are other areas that the CFOs now expand into, such as sustainability, the responsibility and oversight for technology, and direct engagement with external stakeholders as there's more focus into creating the narrative of the organization and how they provide value to their stakeholders. The interesting number I would like to point the board to is the area expansion on organization culture and ethical leadership. In a CFO survey, there was 45%. 45% of the CFOs felt that it has now come under their remit or responsibility to have that organizational culture and ethical leadership muscle enhanced within the organization and the team. Whereas for other stakeholders, they are of the view that it's only increased by 27% of other stakeholders thought that it is something that the CFOs are responsible for. So that is an interesting view, differing view from the two different stakeholders. So in terms of professional background, CFO roles, as we've heard, are held by both PAs and non-PAs alike. And as Ken mentioned earlier, the context of which the CFOs operate in really does matters. The extended survey showed that 59% of respondents identified as PAO members, whereas 33 are non-PAs, versus the earlier Pulse survey that had a different profile. Across both, if we were to combine the two surveys, the directional indicator is 145 out of 295 respondents, which is around 50% identify as PA members. I do like to caveat at this point there might be an overlap as we're not able to ascertain who provided responses in the first survey versus the second one. It's potentially that we have the same people answering those surveys. So it is indicative, and we're not saying that it is the exact science. So we're saying the finding about why this matters is that we're not saying PA CFOs are ethical versus non-PA CFOs. We're also not saying that non-PA CFOs are not accountable. They may be subject to other laws, governance codes, professional bodies codes, and governance policies. I know, John, you mentioned earlier, what is the percentage and what is it that they refer to? According to the survey result, the CFOs mentioned that they refer to their peers, which is about 50%. Another 50% refer to their personal judgment, as what Ken indicated earlier. A lot of the CFOs have experienced individuals operating in an environment they may or may not be familiar with. Quite often, they refer to what they call their North Star in coming to dealing with ethical dilemma in the industry they work in. When it comes to ethical challenges recognition, I think there is a bit of an understatement that we need to recognize from the survey results. About 35% of the CFOs responded that they have faced ethical challenges in the past 5 years. But when you read the free text responses from the survey report itself, it is very much a lot more revealing the headline numbers. There is vast majority mention of pressure around financial results, revenue recognition, provision, tariffs, the conflict in the Middle East. So a lot of these things that they mention are ethical challenges that they face. But as you can see, 1/3 of them recognizes the ethical dilemma. So we back the question, and the project team is thinking, do they understand the dilemma they're facing with? Is it an ethical one, or do they think it's a commercial one, or is it a business risk? So there might be some murky of waters whether they think it is actually an ethical dilemma or not. When it came to source of ethical guidance, John, you were asking this question earlier, it is an issue. Our respondents relied more on internal policies and company codes and personal judgment. And in reference to IESBA code, it's only 18%. But in saying that, not all of them are aware that they're actually using IESBA code if they're actually referring to their own PAO ethics code. But it does suggest that the code itself may not actually be a direct live reference point for a lot of the CFO respondents that we've surveyed. When it came to the question on what matters to them, what practical support that they would like for IESBA to be involved in or produce, the CFO respondents asked for case studies. That was the same with the other stakeholders as well. Case studies ranked #1 everywhere we went, whether it was the roundtables that we attended, the one-on-one conversations, or from the results from the surveys. The other examples they've given is more webinar, podcasts, short bits of information that they'll be able to access within 5 minutes of their day as they are going through their roles. And they did mention that less materials that is lengthy and too difficult to digest, such as a technical guidance. At the same time, we did hear from other stakeholders that caution against more regulation and whether there needs to be a further amendment to the code as a result of this initiative. That is basically the survey results. But before I pause for questions from the board, I think it's a good place for us now as a project team to wrap this up in a little bow and explain what has the SMART pillar enabled the project team to do differently and what impact has it has. It is very important to acknowledge the amount of work that's been undertaken, but a lot of that work was also driven from the thinking that we came through the SMART pillar. The role of CFO project being a pilot, we needed to think differently. CFO population were ones that we don't normally engage with, or not that we don't intently go out to engage with them, but they may not engage with us. If you see in the slide in appendix, we managed to attract over 100 CFOs to attend the roundtable in person, which spanned over 4 hours. And some of these CFOs work in listed companies, very busy schedules. So there was a difference in impact in how the project team have approached this initiative is how can we tailor and change how can we tailor the approach we have in terms of reaching out to CFOs and other stakeholders for them to understand the imperative of this initiative and for them to be able to provide the feedback that we needed to be able to come to the necessary conclusion that the project team presented to you in front to you today. In terms of simplification, it was very important. The project team anchored its understanding upon the terms of reference and what the project team been tasked by the board to do. Each and every one of the email and the briefing note and the letters that was sent out was tailored to be able to attract and send out the message of what is important to the stakeholders receiving on the other end. In terms of mobilization, as you can see, apart from the academic research, the project team did outreach in person and online, as well as engaging through the survey that we've had. So there's 3 different platforms that we use in terms of mobilization to be able to gather further and broader evidence base. In terms of responsiveness for this pillar, for this particular initiative, the project team provided post-event summaries and synthesis to each one of the roundtables that we attended. And it is tailored for the discussion that we've had that day. And it is within the project team had a target of 48 hours to make sure that our stakeholders are still interested in what we're doing and be able to attract them to provide further feedback, to be able to refresh the memory of what was said during those roundtables, to be able for them to then think about what else they haven't shared. In terms of targeted action, as you can see with the work that the project team has undertaken, we were very conscious in understanding where are the gaps in the evidence, what else that we needed to understand, what is available in the market, and what is it, the questions that we needed to further ask to be able to enhance the work of the project team. The last pillar on adoption, I have to caveat that it is a different perspective for the initiative. Adoption can mean different things for this initiative as we're not in standard setting mode. And we're not saying that we will be in standard setting mode. Adoption is the level of responsiveness of our stakeholders in terms of the outreach we've undertaken. So I'd like to caveat that the adoption pillar has a slight different understanding in terms of the SMART pillar. So I think this is a good time to pause for any questions from members.
Look, just think we've got like 2 more slides after that. I might just run through those and then we'll go to questions. No, that's all right. Okay, so we've sort of gone through this a little bit as we've gone through the presentation, but in terms of, we just wanted to highlight some of the indicative implications we think that there are for the IESBA, but also for the ecosystem more broadly. So as we've already seen, there are differences in CFO background and whether that creates a gap in terms of, being subject to a professional code, the ethical requirements, the CPD, monitoring and enforcement actions. So we think that is something that may impact or be relevant to regulators. Similarly with the level playing field concerns, similarly, same thing around that with those two together, that they may have implications for the regulatory community. We've seen differences in CPD requirements, so we'll synthesize that in the final report and whether that has implications for the PAO community as well. We've talked about undertaking a gap analysis to look at, in particular, the jurisdictions we've looked at in terms of what are the other regulatory requirements, governance requirements, etc. So we think all of these things, they do have implications for IESBA to an extent, but they also do impact others, the regulators, PAOs, and possibly other JSS as well. In terms of, next slide, and in terms of implications for the IESBA, what we've seen in terms of the code adequacy, the key issues are still around pressures, incentives, role concentration, and whether that affects application. We've heard from a number of stakeholders that the code, its current, conceptual framework, fundamental principles, etc., adequately address these evolved role and the issues that have come through. Increased awareness is clearly an issue that needs to be considered between IESBA, but also maybe IFAC and also the professional accounting organisations. And also the solution may be around practical guidance or applying the provisions of these new particular issues that have come up. Some of the issues that we've come across would be informative for the other work streams in the IESBA, we think. So, for example, definitely technology, possibly firm culture and governance. So we'll explore these in further work that we do towards the final report and whether that has implications for other IESBA work streams. As we've seen through the different modes of outreach activities, that there is definitely a clear need for practical support that's been requested around, concise guidance, case studies, etc. That's been consistent across the board in terms of what we've heard and whether that impacts a potential phase 2 of the CFO work stream. And again, that would require also interaction and coordination with PAOs and potentially IFAC as well. And finally, just in terms of next steps, we've talked about that. We've got a couple of more outreach activities to do. We've still got to synthesize a lot of the data, look at cross-cutting themes across jurisdictions, stakeholder groups, sectors, entity size, etc. Conduct that gap analysis we've mentioned, also analysing the code from what we've heard in terms of how parts 1 and 2 interact with those or apply in relation to those new aspects we've seen. And then, yes, will be not December, it'll be September that we'll develop the final report and recommendations to the board.
Thank you very much, Carla and John. Very good presentation. I will open the floor for board members to make any question or comment on the 3 parts of this presentation, which was the results of the global survey, the embedding of SMART in this project, and these indicative implications, I think it was the name, which are already very useful to help the board starting thinking about what September may look like, but also if there are other suggestions, because if you can move to the other slide where you have you already have here some possible solutions or way forward. included, but maybe if board members already have some ideas about what we could do, please share them now, because the project team will be working on this, so that in September they will come with concrete proposals that we can discuss and decide. So the floor is open for any comments, suggestions, questions. Sadia.
At the onset of this project, I remember saying that this is going to be very different from other consultations that we've done. Some of these stakeholders might not have thought that they were the primary target audience. So I'm glad to see that we did receive a good response to our survey. I also just wanted to understand if any of those surveys responses were not individual, but actually collective. The way we are accustomed to seeing that some of our responses might represent one individual and certain responses might represent a collective. So it'll be helpful to understand, and if they were collectives, who were these organizations? I'm happy to see the mobilization of the SMART. I thought that this was one of those aspects that we did really well. And we did it well because we had that initial pulse survey. But the way I recall the pulse survey, that was an early indicator survey. And I was just thinking about how you move on to your report. I would caution against putting too much emphasis on that pulse survey because it was done before we actually thought through some of the issues, and it might distract from the real survey that was the one that went through the due process and went through our official channels. Having said that, this project is very different from other projects. When we say regulator in this one, who are we talking about? I think clarity on that one would help synthesize that in the circumstance, the regulator are we talking about the audit regulator, any other regulator, a regulator of CFOs, if that exists, but understanding that would also be helpful to understand who the stakeholders in the project would be.
Thank you so much, Sadia. Luigi, please.
Yeah, thank you for the comprehensive and complete presentation. While I find myself in this indicative implication with the first two columns, the third one is a little bit scary in the sense that do we have the capability to implement a similar solution? Because when we come to the professional accountant in business, we also need to consider additional organizations. I'm speaking about my experience. We have the professional accounting organization, but we also have association of the CFO, for example, that are very prominent. And maybe these are other organizations that we may need to consider if we would like to go into this direction. But going into this direction it requires very significant resources. So
you mean the practical guidance?
No, the leadership-oriented collaboration.
Okay.
Sorry.
No, it was my.
So the practical guidance and then wait for the technology project to produce some outcome. I'm fine with them. It is the third one where I don't know. Well, probably it is too early to know, but I find that it could be very difficult to implement. Difficult not because it is technically difficult, but because it requires resources.
Thank you, Luigi. Rania, please.
Thank you. So I'm looking at the indicative implications, and I'm not saying that we should go in any particular direction. I'm just looking at the implications of the findings. And I'm thinking that perhaps you may want to add to the list for consideration, or not non-consideration, but just to be there. I think this could have some implications for the A&I work stream, because I'm looking at, enhancing support, and especially if the A&I work stream goes beyond IESBA. So for example, digital tools, scenario-based learning, real-world case studies. So I don't know if this is something that goes for, that can sit there, one. And secondly, I think I got the sense from the feedback that also the simplification of the code, I mean, I know this is something that, had come across our previous, discussions of the board, but I think these are implications, since you are listing the implications, that they, warrant some attention. Whether we take them on, that's another story, but just to say, thank you.
Thank you very much, Rania. John, Carla, back to you. Any reaction to these comments?
No, not really. We'll take those on board, especially Asadi and Luigi. Rania, we have thought about that too, in terms of some of our findings. It may impact the restructured code PIR as well, but also, the simplification initiative in the SMART, as part of the SMART framework as well. There may be some aspects as well, how we would, that would inform those as well. So, and adoption, well, that's definitely a true thing as well.
Thank you. Thank you so much.
I do have a point to clarify for Sadia in terms of your question and whether it's collective or individual. For CFOs, we purposely make it individual. It's not to pin them down to organization because it is anonymous. For other stakeholders, we did have a question saying, are you responding as an individual or on behalf of organization? So there are some responses in that category that came as a collective organization response rather than an individual one.
Thank you very much, Carla. Obi, please, if you can keep it short, I'd be grateful.
Thank you, Chair. So, okay, I just want to comment on. I want to ask whether there's opportunity for more people to join the virtual roundtable from Africa. Then I also wanted to point out that we could, under what we could do, we could also develop e-learnings as part of practical support, so that it would be, I think it would be a good resource. Then thirdly, I want to suggest that given the broadness of this project, that it would be a good idea to also combine it, as it were, with the post-implementation review on NOCLA and also our adoption drive for the IESA. It would be a good point to as they use the same opportunity to address this initiatives. Thank you.
Thank you very much, Obi.
Thank you, Obi. So to your point about more virtual roundtable, we actually have one on hold for Africa CFOs. We had to postpone it and we haven't set a new date. So we will be sending out communication to ones that sign up before on a new date. So once that's available, I will share that date with you. And in terms of, we'll take on board the recommendation for other work that we're undertaking. But I also like to take this point to stress that we keep saying project is an initiative. It is not a project. Thank you.
Okay, thank you. Note taken, Carla. So thank you very much. Before we close, Philippe, do you want to contribute to the discussion?
Thank you, Gabriela. I like to contribute to a discussion and avoid contributing to the confusion. My comment at this stage, having heard, the different presentations, and thank you for the quality of the job of the presentations, is a fundamental question. Because at this stage, I'm just wondering, what is your purpose, in fact? What is your goal? And the goal will not result from compiling information and so on. It's the positioning now of what you want to do. I mean, CFO, it has something static to say CFO, as it was something, limited and well designed and for every country or every organization, CFO definition. It depends totally. What is true is that it's transforming now globally, generally. And it's transforming with new activities. In addition to what could be considered the traditional role of a CFO in the past, notably in the center of the activities with the financial statements responsibility. In these new activities, you have things which are delegated by top management, which are CEO responsibilities. I mean, for example, the digital transformation of the big organization, very often involve or are led by CFOs with the support of CIOs. Or mergers and acquisitions. The CFOs play a key role, in mergers and acquisition, really making or being key in the final decision of do we buy or not, and things like that. So my question, to come back to my initial comment, is do you want to consider that in the new activities now of the CFOs and the activities that they love, because that make them close to the CEOs and to management, and generally in their career project, they intend to become top managers, CEOs, and so on. So do you want to identify in the new activities what could be threats for the traditional activity, notably including the accounting department activity? Or do you want to consider and to address new ethical problems linked to the new activities of the CFOs? Because, at the end, the output is totally different. In the first approach is considering the contents of the code now and strengthening the parts, against the risks connected to the new activities, the risks on the accounting activity, or expanding the code to new dimensions, considering the new roles and the new activities of the CFOs, but resources, time, and is it in your scope as a IESBA? So I'm just stressing this point, and from a PIOB perspective, because the clarity of your objective and what you want to do, beyond the fact of, saying it's CFO. So CFOs, it can really considerably vary in scope. And so what do you want to do? Reinforce the protection of integrity for accounting activities, or addressing ethical aspects of the new activities of a CFO? It's an ocean. It's a big journey, the new activities. If you consider a situation like a merger and acquisition, for example, and you investigate in that, there are a number, of specific issues and so on, placing a CFO after that in sort of self-review in the way of, assessing the investment. I think it's really something that you have to decide strategically in the orientation of the project, and which does not depend on the way you are informed of the different considerations on the market, literature, and so on. It's what you want to do at the moment. Thank you.
Thank you very much, Philippe. I'm not sure that we are in a position to respond today. I don't think so. I think that the project team, the work stream, will have to process all this information and all these discussions and come back with some proposals about what do we want to do. One thing is sure: what we want to do must fit into our into our mandate and should not go beyond the mandate. First thing, and second thing, and more importantly, must serve the public interest in a very clear way. It's not must not be just an intellectual or academic work, which could be very interesting, as we can see. It might take us very far, but we are aware of our role, of our mandate, and our main mission, which is to serve the public interest. So I'm sure that whatever the work stream comes back with in September, it will be framed by these elements. And even if we might be all very excited to do other things in our different roles, in our different approaches, and that's. Sorry? Like CFOs and like many things from the governance perspective, from the academic perspective, from many perspectives, whatever this board may want to do must be framed by these elements. I think that these presentations were impressive in terms of not only about because of what they reveal in terms of the work that has been done. I think they are extremely clear. It's very not visionary, but you manage to anticipate a lot of conclusions or takeaways and even indicative implications, which may help us, I think, in September, making a very clear decision. So this was really good. But I think that this conversation today and this presentation also demonstrates or challenge a little bit some perceptions that may have been created along this across these last months about what we want to achieve and how we want to achieve it. It demonstrates the importance of the significant outreach done, without which it would be completely impossible to achieve any kind of conclusions or even takeaways which were grounded on comprehensive, global, wide, diversified outreach. It also demonstrates that the IESBA is very clairvoyant, to use a French word, about what we can and what we cannot do. I don't think that anything in this presentation points out to anything that cannot be within our mandate. Third thing, and I think it's also relevant to highlight this, there have been some skepticism among some stakeholder groups about the importance, not only the importance of this work, but also whether this work fits into our mandate. It's not easy for me to understand why these questions come this way, but I think it's always time to address them and respond them. And one thing, and again, this is not, that does not write anything in the stone, but there was broad support when we included this in the strategy annual plan 24-27, broad support to this project, inclusively from many who are now questioning, sometimes in a somehow aggressive way, why are we doing this? What's the importance? It's not in our mandate. So it's a bit difficult to deal with this change of minds and change of opinion and change of recommendation, advice to us when the same stakeholders say one thing and then it's opposite. And I need to say this very clearly, and it's not about criticism, it's not about anything, but trying to understand why these things happen over time. One different thing is if stakeholders still think that this is a priority against other priorities that we may have. But this does not justify and does not allow to attack the substance of and the reasons for the project and the process that we have been following, which I think this presentation clearly demonstrates that has been transparent, professional, grounded on the best, on the most relevant objectives, and following everything that we needed to follow in terms of process and everything. So I don't think that the substance is different. The substance, which is there a problem? Do we need to do something to address the problem? And that was always the question. We never said that we are going to do standards or that we are going to cover the non-PA or that we are going to do governance. We just needed to understand the world around to see if there is anything that we need to do. And I still probably think that maybe there is something to be done. The process was completely fair, transparent, everything that we needed to do the way we needed to do. Now, the question now is more, what exactly may we need to do in this, which is relevant? And the second question will be, is that a priority? But that's a completely different thing, and please don't mix the two things, because the relevance is not, and the legitimacy of this work, it has nothing to do with whether this is a priority now, 2026, June 2026, or if it was a priority 2 or 3 years ago. So I think this was a really important conversation to remove some questions, to address some questions, legitimate, of course, and we are not putting aside the questions at all, nor diminishing their importance. It's because we have questions that we are able to clarify everything this way, and probably because we had questions, recurrent questions about what are you trying to address, what's the public interest issue, and etc. That made us go deeper and in a more professional way in addressing this work. So I'm really happy with what we are seeing here today. The future, in the future, which is not very far from here, it means September, there will be decisions about if there is anything to do, what's in it for us as an ethics standard setting, a global, international ethics standard setting board, and can we do it? Is it the time, given the priorities, the resources, can we calibrate all these things? Finally, big thank you to the work stream, to David and etc., because this has been huge. I must note that John and Carla are not full-time in this project. They have other very important things to do and very time-consuming. So this has been really, I would say, exhausting, close to exhausting. But I think that what we saw here today makes all this work worth and puts us in a very good position for a very good decision in September, based on whatever the work stream is going to bring us. So thank you very much, and thank you for the board, to the board members, because I know that even at around the table there was some doubts about do we need to do this, but what we heard today once again demonstrates that the members came prepared and with clear thoughts, even if probably in slightly different directions, but I didn't see that as well. I think that it's going to be relatively easy, if not very easy, to get an agreement around the table about how to move forward. And sorry, I know that I'm between you and the lunch, so we'll stop here and come back. Well, we are a bit late, so 1:45, 1:50, Ken?
Yeah.
1:50?
I would suggest 1:50.
1:50, okay.
Thank you.
Thank you very much. we are still missing two or three. Okay, we are still missing, I think, a few people, but it's better that we start because we need to finish on time, and I suspect that probably we will need a few minutes more for one of the sessions. So this next section is the session on the independent standard setters, independent standards for sustainability assurance engagements outside the scope of IESA. So what we, in a very short manner, call Part 4B. You will recall why this project was started, why this work stream was initiated. By the time we finished, we approved and issued a IESA, there were questions from stakeholders and from different stakeholders, some of them coming from the profession, from the PIOB, etc., asking us to check if there was a need to change Part 4B or to develop something similar to Part 4B to the sustainability assurance engagements, which fall outside the scope of the IESA and therefore outside the scope of Part 5. The scope of Part 5 is relatively narrow, as you will remember. Of course, the importance and the public interest impact of what's in the scope is very relevant, but it's narrow in terms of the number of engagements that it ultimately covers, and became narrower once the world changed a little bit and the evolution related to sustainability assurance regulations evolved in a way which made, I would say, the number of engagements captured within Part 5 even more limited than they were initially expected. So this, of course, triggered this the board to start this work stream. It was and it is a necessary work. And what we are going to do today is to consider the project team's final report and recommendations regarding the independent standards for sustainability assurance engagements, which fall outside the scope of the IESA, and in light of these recommendations that the project team will bring, determine whether to proceed with the standard setting project or pursue other actions or no action at all. So thank you very much to the work stream staff support, Sylvia, Elaine. You have done a very silent and job behind the scenes most of the times. We had some information about the preliminary findings in the last meeting, but this has been a very quiet, very frequently not visible, but important work that has been done to understand if there is anything that we need to do and where we stand in this with respect to this, what was a vocal request and call for action when we finished IESA, but may have changed for many reasons over time. Sylvia and Elaine, the floor is yours.
Thank you very much, Gabriela. Yes, and indeed, the project team includes Elaine and myself, and we've been working on that project since September, and we are supported from the board by Mark and Nancy. So today, what we are wanted to bring to the table is really just to a report back on the information gathering that we have carried out over these months. Of course, you have already heard some preliminary information in March as well, but this will include our final report that we have circulated prior to the meeting, and also we would like to present to you what was the project team's conclusion and what would be our recommendation regarding the way forward. And just as a quick recap, what was the focus of this information gathering is really, as Gabriela mentioned, is to understand the nature of the sustainability assurance engagement outside the independent standards of the IESA, which is really, as you know, includes the voluntary engagements mainly that was performed not for the public, so it's for a special purpose engagement. So that's what we were focusing on, and we wanted to understand what are the reporting frameworks, the assurance framework, and really the ethics and independence frameworks used for these other engagement when they are performed by professional accountants and also by non-professional accountants. We also focused on or wanted to get information that what's going to be the extent of the sustainability assurance engagement. So as Gabriela mentioned, there are some changes in the landscape. So we believe it's important to know that are we talking about a big number of engagements here, because that's really determine the importance of the work and the urgency of the work. Finally, we also wanted to see the adequacy of Part 4B and how Part 4B addressing these engagements, because as you may recall, these other sustainability assurance engagement would fall under the scope of Part 4B, which is unchanged and not the profession agnostic standards. And given that the assurance framework, so for example, ISSA 5000 captures all these engagement, then in some cases Part 4B will be the relevant ethical requirements when they are using ISSA 5000, and ISSA 5000 bring in some elements as the value chain and the group engagement. So we wanted to see whether Part 4B is appropriate to capture these new sustainability elements brought in the assurance framework. And finally, the focus was to see whether there is a need, a public interest for a profession agnostic standards for these other profession agnostic independent standards for these other engagements as well. So basically, these were the key focus points of our information gathering, and the activities really included what we already presented in March, that we had engagement mainly with the jurisdictional standard setters that included a touch point at the meetings, the biannual meetings, and we also reached out to them in a questionnaire to get information. We also targeted the practitioners, and we contacted the IMAG and the TICG, so both in IESBA and IESBA, the monitoring groups of the adoption and implementation of the sustainability standards. And again, we used a questionnaire to get information, because we believe that is the fastest way to screen the information from this group. There was a collaboration with IFAC, because IFAC carried out the state of play, and they get a database from this state of play exercise. So we wanted to get some information from this database as well that is relevant to the project. We had a discussion and a liaison with the AIF at the beginning, just to understand where they are standing now and what is the process. But as John mentioned, there is no movement in that regard. And also in our terms of reference, the board suggested that we look into whether there's a possibility to commission a research to understand the nature of sustainability assurance engagement performed by the non-PAs. But as we progressed the information gathering, we found that a research probably would be a bit too premature, and we wouldn't get different information that is currently available from the IFAC database or data set. So we decided not to pursue that specific activity. So this is just a summary, and we wanted to go through the couple of findings quickly, because we already presented in March, so we would like to focus more on our recommendation. But with that, I would turn to Elaine, who would start with the collaboration with IFAC first.
Thank you so much, Sylvia. And this slide may be familiar. We were able to obtain updated information from IFAC, so thank you very much to our colleagues over there who were able to give us some information prior to publication of the latest state of play. And so SAEs outside of the scope of the IIS in the IESA are still being undertaken in a wide range of contexts, including engagements based on special purpose frameworks, voluntary disclosures, or reports intended for a limited group of users. And as Sylvia mentioned, the market for understanding where the state of these SAEs outside of the scope of the IESA is still quite not as mature as we might have hoped. And so, but it is to be expected, given the timelines for adoption of the IESA as well and ISA 5000. And so, as we were going through our data, we did have, some limited availability on comprehensive of data on such engagements. And therefore, we looked to IFAC to be able to see what was the best available information. And what we found was that the IFAC information on engagements that would likely be within the scope of the IESA, but this was really, the best information that we have available at the moment to look at. So just noting that as a consideration for what we looked at. So we did not note very much difference from the 2023 data to 2024. We do see a higher concentration of other service providers providing services in certain jurisdictions. But once again, the range of performance just varies across and is very fragmented across all of the jurisdictions. And we did find that there were significant differences in the nature of the SAEs to which Part 4 is or would be applied to across those different jurisdictions. And so this data set here, we had discussed the comparable 2023 numbers, and once again, this hasn't really significantly moved in 2024. And so as a reminder, this data set does include engagements reported under a wide range of standards and frameworks. So for example, we have ISO engagements and A1000 along with the ISA 3000 standards included in here. So we do recognize that some engagements in this table may be characterized as verification or certification engagements rather than assurance engagements. But once again, this is the best available information that we have. We also did not really see any change on the right-hand side, any reported usage of the IESBA code when other service providers were using the ISA 3000. So that's pretty consistent with what we saw in the 2023 data. And as previously mentioned, is a pretty low percentage there. So in addition, we also had two presentations to the jurisdictional standard setters. One was in November of 25 and one more recently in Madrid at the end of April. And so we noted a lot of common themes here from the JSS that we did see that diverse range of sustainability assurance engagements, the uncertainty of what the non-PA practitioners are doing, as well as concerns about the growing complexity, perceived complexity of the code and length of the code. However, we did provide them an update and analysis of the information similar to what was provided to this board in March. And based on sort of the preliminary analysis and results that are not too much different from the data that the final data that we received, there was general support for not initiating a standard setting project at this stage. And when we discussed, they were also very supportive of continuing to monitor developments in sustainability assurance practices and to kind of keep an eye on this area. And with that, I'll pass it to Sylvia.
And the final source of information that we relied on, as we mentioned, that we have circulated questionnaires to different stakeholders groups for the JSS, to the EMAG members that included firms and non-PA practitioners as well, just to get information on what I mentioned that was the focus point. And to this date, we received 20 responses. I guess you can see it in the report, so I don't want to go into the details of the respondents, but what we have heard, what we learned from these questionnaires as well is similar that Elaine mentioned from the other information as well, that there is a different maturity of sustainability reporting and assurance in the different jurisdictions. So that means that the way they use the Part 4B to the extent of the voluntary engagement is really like on a large scope. So we received responses that they said that they can largely use Part 4B, but there are some jurisdictions where they said that they will not going to use Part 4B. They are planning to use Part 5 to every engagement. So as we can see, there is still a wide range of across the jurisdictions. And I just would like to mention the key challenges related to the analysis and what we have heard from many respondents, that they would be willing to provide information, but they believe it's too early yet, given that the ISA is still not yet effective, so they can provide more once it is effective and it's a bit more settled. Also, we saw that there is some issues and there were some unclarity regarding the scope of the independent standards in Part 5 and what would be the scope of the Part 4B with respect to this sustainability assurance engagement. And actually we transferred these questions to the EMAG as well, so just to be sure that we provide clarity. And the other element that we mentioned, that we saw that there was concerns and questions about the distinction between the assurance engagement versus the certification type of engagement, especially when we talked with non-PA practitioners, that they mentioned some engagement that they believe would be under Part 4B, but we believe that those engagement would be certification type of engagement, so wouldn't be necessarily captured or wouldn't be captured by the code. So that was also provided some uncertainty on how we can read this information at the moment. Oh, sorry, I think I was using the wrong slide. Regarding we also had the question of whether they believe that the Part 4B is adequate to address the independence issues related to these other sustainability assurance engagement. And the majority of the respondents said that that they haven't identified any gaps so far. Again, they mentioned that probably it's too early to tell if there is any gap. There were some suggestions for the board to consider developing guidance to support the application of the Part 4B for sustainability assurance engagement, especially when it is a non-PA practitioner. And we received some few suggestions about potential areas that could be further enhanced, but it wasn't raised as something imminent, or it's just a suggestion that something might come up regarding the provision of non-assurance services or network firms or the group engagement. But these were only a few responses that we have received. So basically, the project team and Mark and Nancy, we held a few meetings in this quarter just to really analyze this information and see where we are. And basically, what we believe that is the key characteristics of the current landscape is that what we see is there is a slowing down in the growth in the mandatory sustainability reporting and assurance, and really jurisdictions are focusing mainly on the largest entities. So there is a change in the landscape since we have started, or since the IESBA was approved, and when the board decided that there is a need to consider whether to develop independent standards for these other sustainability assurance engagements. Also, as we mentioned, there is still a limited availability of comprehensive data regarding these voluntary type of engagement that would fall under Part 4B. So it's really difficult to draw any conclusion, given that ISA is still not effective, and there is a lot of movement across the jurisdictions. The other element that we have identified, that there is a significant, or there is a diversity under what engagement would fall under the Part 4B, and there is a differing practice and regulatory environment. And again, as we mentioned, and it's the challenge is around the distinction between what's an assurance engagement and what a certification type of engagement. So with these, or with considering all these information, the project team didn't really identify an evidence suggesting that the existing independence provision in Part 4B would be insufficient or would require changes at this stage. And also there were no clear public interest driver for developing a new or an enhanced independence requirements. Then this driver was there when we were developing the IESA, given that we have the IOSCO's call for profession agnostic standards, but there is no such call with respect to these engagements. So what we recommend at this stage, or what we do not recommend, is that we do not recommend that the board initiate a standard setting project at this stage, simply because there is no clear evidence for such a need or what could be the scope of these standards. Instead, we propose that the board continue monitor the developments of the sustainability assurance practice. And we believe that there is already an existing mechanism, namely the IMAG, the IESA Implementation Monitoring Advisory Group. And this is a really active group monitoring the implementation of the IESA, but also beyond that, the sustainability landscape. So we had a chat with the IMAG chair, Luigi, who agreed that the IMAG could take on that job, this monitoring job. So with that, our recommendation that the board defer the consideration of standard setting until there is a clear evidence or the question about that matter. So we are not saying that there is no need for an independent standards, but what we are saying that at the moment there is not sufficient information and evidence that would suggest for the board to start a standard setting project. And I would just like to ask Mark and Nancy if they have anything to add to what we have.
No, I think that sets it out well. I think what we recognise is that the speed with which sustainability assurance engagements are rolling out has slowed, and in particular, for instance, in Europe, we've got the omnibus review of CSRD, which is cutting the number of entities that are going to report. In many jurisdictions, the focus is very much on the largest listed companies. So therefore, the IESA is there to address public interest issues where those entities are reporting. And I think it's quite simply, as Sylvia says, we don't have evidence to recommend any action by the board at this stage.
I agree.
Short and sweet. Okay, thank you very much, Sylvia.
Just wanted to say that, Gabrielle, we would like to ask the boards if there's any question regarding the information gathering, or if they or regarding the project team's conclusion, and of course whether the board would support the recommendation of the project team.
Good. Thank you very much, Sylvia, Elaine, and thank you very much, Mark and Nancy, for the work that you have done with the project team over these months in a very autonomous and, as I said, quiet, silent, not visible, but intensive, as we can see from the results. Thank you all. I will now open the floor for comments. Christelle, please.
Yes, thank you for the work done. Clear conclusion. I agree. And I have no question. I understood everything.
Thank you, Christelle. David, please.
Well, I'm going to follow Christelle's lead. I thought it was really clear. I don't have any questions, and I absolutely support the recommendation. Thank you.
Wow. Amajit, please.
Ditto, David.
Vania, please.
I fully support the recommendation because we are not yet at the point where we will have the IESA fully implemented for us to identify properly what should be done in terms of other things. So I fully support it.
Thank you, Vania. Tomoyo, please.
Thank you, Chair. I agree with the proposal. But sorry, one comment. So, how are we going to track the further changes in the data? Because at some time maybe the situation may change. So, so that's the only question. But generally, I'm fine with the proposal. Thank you.
That's an important question, Tomoyo, and I was going to make a similar question at the end. So we'll go back to your question. Hector, please.
I wanted to support the conclusion as well and the proposal going forward. Thank you.
Thank you, Hector. Sadia, please.
I too support the conclusion. I also just want to say that the process that was followed was really gave us enough data to come to an easy recommendation and a support. Thanks.
Thank you, Sadia. Namely, data about the data that we don't have yet, right? Which is an important, it's an important element for this recommendation. The conclusion that the market is not. Hector, do you want to come back? Okay. The conclusion. Oh, sorry, John, I hadn't seen you. John, please.
Thank you, Gabriela. I'm not going to change the answer. I fully support the conclusion. I think Part 4B is widely viewed as being sufficient for lots of different types of assurance, including sustainability, and therefore we should only change it if there was clear evidence, which clearly there's not.
Thank you, John. So the direction is very clear. No doubts, no disagreements, no fundamental or existential questions. I have just one more practical question, which is more or less in line with Tomoyo's question, which is, okay, we had decided to start this work. We are coming here with a recommendation from the project team saying, let's not start a work stream here. Let's monitor and see what happens in the future. And I think that it would be good to have some, just a little bit of additional clarity about how this is going to go, because the recommendation is that this moves to IMAG, okay, and IMAG will see if there are issues or problems. But Tomoyo is also speaking about data, which I think IMAG is not prepared to collect data globally about what's happening. And my question, this is not an opinion, this is nothing. My question is, what you are suggesting is that we stop, close this, and one day, if we see something, we go back to the project? Or is it that you have a recommendation that in 3 years' time or something like that, the board reassesses and sees if there are any signals that we need to make this project revive? I think that this should be clear, because as we are going to see in the next conversations, we need to have very clear what we have moving live, what we have stopped and finished, and what we have parked on a shelf and that we may need to go back to one of these days. That's the only reason why I'm asking this. Okay, Ken, please. Sorry? Oh, Nancy, sorry.
So I'm doing this a bit on the fly, but I think the view was that the IMAG would help to identify changes in the environment that would lead us to do something else. But I'm thinking about the, and I'm going to get the name wrong now, the acronym wrong, but it was the emerging issues and now is the trends and risks. Yeah, I think that might be a good way for that group to help monitor this, because I agree with you, Gabriela. I don't want this sort of hanging. We're going to go out in 2 years and do additional analysis. One of the things that we learned here is these verification certification services, which would be outside of 4B, seem to be one of the predominant ways that these assurance, and I hesitate to call it assurance work because it's not that, but that some of these reports are being done. And if that trend continues, and if that's, then I think that would give us data that would say there's not much we can do with respect to that. So what I would just suggest, and again, this is without discussion with the project team, but maybe the Trends and Risk Committee might be a useful tool for us. But I would not recommend that we keep something hanging, that we're going to be doing an additional survey or anything like that down the road, unless and until there's evidence that would trigger that.
Okay, thank you very much, Nancy. Luigi, please.
Yeah, I think that this is really a good question and a good matter to consider. I tend to agree with Nancy. I would also add that IMAG probably has some practical, not mathematical, of course, or scientific, but practical sensors inside, because we have so far 11 members that are active in the market with different type of roles. And I think that they could provide us at least some sense on a timely basis whether they are experiencing something different compared with the result of the analysis. And without being a scientific way to decide, they could provide us sufficient evidence that a new project is needed in order to ensure whether the situation is still unchanged or whether there are changes that require further considerations.
Thank you very much, Luigi. John, please.
Thank you, Gabriella. The thing that I've got in my mind is the trends that the project or the work stream have identified of demand for sustainability assurance slowing down is impacting the IESA as well. And I don't know what the timing is of the post-implementation review of the IESA, but it could be that we could say that actually we're agreed that we're not going to proceed with the standard setting, and that the trigger point would be the post-implementation review of IESA, because that would give us something factual to actually base something on.
That's a good point. Also, so combining what the three of you has proposed, I think that we have a clear idea. I just wanted this to be clear because I don't like the idea that we have things hanging around and maybe one day someone will say yes, but you did not close it and you should have done something. So, which doesn't mean that some projects cannot be parked for some time, but it was just a matter of clarity. And thank you very much for the good direction that you gave. Ken, please.
Thank you, Chair. My response essentially is along the lines of what we've heard from Nancy, John, and Luigi. To my view, it is going to take a package of mechanisms of responses, individual responses. First of all, EMAG absolutely would be, let's say, the interim monitoring mechanism until we get to such a point in time in the future when the board would make a determination to undertake a formal post-implementation review as a mechanism. And in fact, I was more thinking not so much that we would look only at the PIR for the ESA, John, but also take into account the PIR on ISA 5000. And I was more thinking about it from the ISA 5000 perspective, because the ESA is not going to be used on its own. It has to be attached to an assurance framework. And the use of the ESA is very much going to be driven by the use of ISA 5000 from the assurance perspective. So tracking the utilization or the use of ISA 5000 on a global basis and awaiting the post-implementation review of ISA 5000 would be the right point in time to actually consider revisiting the data collection, etc., and of course in conjunction with the PIR for the ESA. The other thing to bear in mind is with regard to the non-PAs and recognizing that the ESA is profession agnostic and it is also framework neutral. The reality is that insofar as the non-PA assurance practitioners are concerned, they are unlikely to be using the ESA absent a mandatory reporting requirement on sustainability in the relevant jurisdictions. If it's all going to be voluntary, they will use the ISO standards as a default, or some other assurance standards that wouldn't be the IESBA's assurance standard. And in that case, it is very unlikely that they would be applying the ESA. They would go with whatever ethical independence requirements. Well, there are not any sort of independence provisions within the ISO framework, so to speak. They have ethical provisions. They would apply those provisions in conjunction with the relevant ISO standards in performing those engagements, again, on a voluntary basis. But if there were to be eventually some mandatory reporting requirement in a given jurisdiction, and they would like to enter into that area, and by virtue of that fact, they would consider using ISA 5000, then it is possible that they would then consider applying also the ESA alongside the ISA 5000 standard. So all to say is we should wait until we get to that point in time in the future. I would say it's going to be probably another 4 to 5 years, given that ISA 5000 and ESA are coming into effect this December. And we're going to have to allow some additional few years to allow the standards to be put into operation and to have basically firms, practitioners, other practitioners, etc., gain the experience of applying the standards, and also for jurisdictions also to have the additional time to consider putting in place the relevant legal or regulatory framework for the reporting, the assurance, and the ethics as well. So I think we do have quite a few years ahead of us before we come back to this topic.
Thank you very much, Ken. Elaine, I see that you have your card.
Yes, I just wanted to make a note regarding the question on data. So in this report, we were relying pretty heavily on the IFAC data. And it's if they would continue to perform their state of play, I do think that there's touch points with the adoption and implementation working group as well, where we would be aware of this information coming through. So as long as IFAC continues that data collection, we would continue to be able to have that information, at least with regards to the engagements that are under scope of that state of play.
Thank you very much, Elaine. And I think that we can conclude from this conversation that we will not proceed with starting a standard setting project. We will not purely simply abandon the topic. It will be kept under monitoring. This monitoring will be done mostly or mainly under the IMAG work, with a very close connection to the practitioners and to the practice of sustainability assurance. But there will be parts of it which will, of course, also be kept being monitored by the adoption and implementation working group, which is still active there, and also under the TRV, the Trends and Risks Committee. So there will be different ways of monitoring this. Maybe then we can find an instrument or a routine of once a year making the dots connect and have some kind of review of where we are with respect to this topic, because it's still a maturing topic which grew very quickly, which was subject to those pushbacks and this slowing pace and evolution and etc. So we really need to keep it under monitoring, but I think that we can agree this way. Does this summarize what has been spoken and mentioned here? We don't need a show of hands, I suppose, to agree on that. I think that I can assume the agreement around the table. Okay, thank you very much, everyone. Thank you, Sylvia, Elaine, Nancy, and Mark. And before I close this topic, I'd like to give Philippe the opportunity to say something. Also because one of the stakeholders, important one, pushing for this to be done was the PIOB, but of course in different circumstances and in different contexts. So it's important to hear from you.
Thank you, Gabriela. No comment on the decision, except that I know that the decision-making process is fully aligned with public interest framework requirements, requiring evidence, proof that standard project is needed. So well done.
Thank you, Philip. And it's very also reassuring hearing from the PIOB, who had really insisted, and rightly, I must say, at a certain point with us to move forward with it. And the PIOB, again, was not the only one. So thank you. And with this, we can move to the next topic, which is very much related to this one. And it's an update from Luigi and Sylvia, I believe, on the work that has been done by IMAG. Just to contextualize, you all know what IMAG is doing, why it was set up, exactly to monitor the application, the implementation of the sustainability standards of the IESA at a time where there were questions and concerns about whether it would be possible to operationalize, put it in practice. There were some concerns about some possible obstacles, etc. So this was the very open and agile instrument that we have put in place to make sure that on day 2, after the approval of the standard, we had something in place monitoring possible difficulties, obstacles, issues, or any fatal flaws with the standard that we might need to address. We all know that these standards were developed under a unique, unusual speed and within a very tight timeline. So it was something completely new to everyone, the possibility of something not having been done in the best way possible. And we knew that. And we always said that we were doing the best possible within a very short timeline that was given to us because of more than understandable reasons, might not work. So this is a very valuable instrument. And Luigi, thank you very much for chairing it and for the update that you are going to provide to the board.
Yeah, thank you, Chair, for the introduction. We went on in the first semester with a number of meetings, and even after March, with a number of some meetings with the group in order to gather and to have their help in gathering the sense of the market, what it is happening, where are the implementation issues or matter that they believe we should focus on. And we also coordinated with the technical group of ISA 5000 in order to understand whether certain matter we were filtering were also common with them, and some of them are. And in order also to take the same way forward in order to dealing with these matters. What's happened was that in this period, we work at different issues, scenario proposed by the members in order to understand whether there were real implementation issues coming from the standard itself, or whether there were more interpretation issues, or let's say just the initial criticalities that may be present on the market due to peculiarity in the geography of the implementation. As a result of this work, we identified a series of teams that require, in our view, some considerations. Some of them require further analysis because so far the experiences that we have on the market are very limited. There are not many implementation ongoing so far. There are various countries that are preparing to implement, but the implementation ones is very, very limited. Just one, we can say, in terms of practical issues that had been identified. Maybe in the next month, we may expect some more scenario, some more matters to discuss due to the fact that some geographies and jurisdiction are now moving into the preliminary phases of the implementation. Having said that, we identified a series of questions, matters that we believe require some additional work from the board. And our proposal is that the board commission to the staff the preparation of some question and answer, mainly with interpretation matters that could be linked to most of all the initial implementation, so the first time implementation of the IESA, that under, and some of them under the philosophy and under the construct of the IESA are clear, in the intent were clear. The practical application may present some difficulties, and therefore there are some clarification. Then there are other matters that are really issues that we will speak later, but on the it is too early to start with guidance or first-time implementation guidance and so on. So at the moment, we don't think it is necessary to start with this action. We need further evidence to do that. I will pass to you, to Sylvia, that will drive us into the details.
Thank you so much. And I just would like to mention that we have Elaine as well in the group, because we are getting more and more work. So reinforcement is always welcome. So now it's the two of us, Elaine and myself, providing the staff support. And so as Luigi mentioned, we identified some issues through the EMAG. We brought some preliminary compilation, I think back in June, but basically we have an inventory list. We call it an inventory list, where we keep all those issues, and we are discussing that with the EMAG members in our meetings every 6 weeks, I would say, so far. As Luigi mentioned, so far there were no fatal flaw issues that have been raised in relation to the implementation. And we have put the issues that we have heard into 3 categories in line with Luigi just mentioned. First of the issues are matters related to the different implementation stages, mainly coming from the feedback from Australia as well, who went ahead, and also from other jurisdictions as well, who could probably be front runners in that area and would face similar issues. That is really related to the interoperability of the IESA with other standards, given that in some jurisdictions they are not using the IESA, they are in other jurisdictions they will do. So that would create some issues regarding the assessment of the equivalency and other related matters, same as the communication with the group firm and the component practitioner on how to instruct the component practitioners regarding the ethics and the independence issues. So these are the matters that Luigi mentioned that we are monitoring and keeping track. But at this stage, we don't believe that there is more guidance that we can provide. We just need to follow closely. And I think the EMAG is a really great forum to bring together the experts to discuss these specific areas. The second type of issues that matters related to the first time implementation, and these are that are coming up more and more frequently, and more jurisdictions are started to adopting and implementing the IESA. And these are the specific issues that we are mentioning, mainly related to the transitional provisions. Examples like, for example, in the transition provisions, we explaining how the firm that wasn't the auditor before should apply the leader rotation compared to those firms who were also the auditors. So we received some input that there are some uncertainty regarding the transitional provisions. Also, they asked for some specific examples regarding how to calculate the leader rotation with respect to time served on an engagement or with a client before the effective date of the IESA. And there are several scenarios that, of course, once we developed the basis for conclusion, we didn't consider, like if the firm was the auditor, if there were different teams. So we believe that it's important to provide some real life examples and also explain which provisions apply in which cases. There were also some questions relating to this first-time implementation on the scoping of the independent standards, of the international independent standards, with special regard to if there is a general purpose, they use general purpose framework, but the engagement is for restricted use or not for public, what should be, what is the applicable part of the code in these scenarios, where we would like to provide further clarification in that regard as well. And finally, which is probably for professional accountants, it's not that unclear, or we received that from firms as well, is that the provision of non-assurance services before the effective date. And its questions really comes up given that the mandatory reporting regarding sustainability has just started in many jurisdictions. So the clients tend to turn to the assurance practitioner for advice. So there is also some unclarity that what's the extent of the non-assurance services that the firm can provide or could have provided in the past, and that wouldn't create wouldn't hinder the firm to take on as the sustainability assurance practitioner. So this is really what we believe is what we characterize as the first time implementation. And the third category that Luigi mentioned also, which we called other implementation matters, but of course that's going to be by time a big category. It really relates, I think, to the group engagements and the value chain entities, or the value chain components and other practitioners. Of course, it's even more further in the application because there is the deferred effective date. So we don't really have information also on the reporting from the value chain. So we heard some questions and asked for further clarification, but in these instances, we don't believe that we can provide a response. We need to follow the practice further, or need to see the best practices simply. And so this is just a summary of some of the issues that we raised. And I think the reason we created these three categories, because we believe that the responses we provide should be different. So, for example, when we are talking about issues related to the different implementation stages, as we mentioned, that there are not necessarily more guidance that we can provide. Simply, we need to wait and need to see if we can provide further supporting materials. But so far, we believe that the FAQs and the other documents, because indeed, we already provided quite a lot of documents, like the proportionality documents or the comparison documents. So these are already really, or the feedback is that these are really useful materials. However, regarding in the second bullet, the issues related to the first-time implementation, as Luigi mentioned, the EMAG and also this group propose the board to commission the staff to develop further FAQs that are not yet covered, and that these FAQs be published before the effective date of the IESBA, so mainly before by the end of Q3 and before Q4. And the third bucket is the other implementation issues, where I mentioned that we believe that we need to follow the practice and see where what's going to be the assurance practices. However, having said that, we are working closely with IESB's group as well, and they are also developing some FAQs, especially in relation to group and the value chain component. So we would see some benefit of issuing joint FAQs whenever possible. So that would also show that we are addressing these matters. For example, the value chain. Some of the issues are not only related to independence. So we believe that we need to address those holistically. And we have already identified 4 or 5 areas where we can develop these joint FAQs. For example, we receive many questions regarding the changes, how to address the situation when there is changes to the value chain, or how to assess the equivalency of the standards used by another practitioner. So these are not all independence or ethics related matters. So we would identify these issues and see if there is a benefit, or there would be a benefit to issue joint FAQs. So I think these slides, the next slide, just really summarizes that I have mentioned. Our 2 proposals is that to develop FAQs related to the first time implementation in the next quarter, And what we suggest that we started to work on these FAQs, and we would include the EMAG members as well in the development. And as usual with the FAQs, we would circulate the document via email to the board to get the board's input and the fatal flow comments as well. And we would publish that before September, hopefully, or around September. And the second proposition is to continue the coordination in the IAASB and see if there is some opportunities in relation to topics, to value chain components mainly, and using the work of another practitioner to develop joint FAQs, because simply what we found that many issues, as Luigi mentioned, coming up at the TICG and the EMAG level as well. So we don't think that we can address these issues separately, or even the same that maybe the IAASB would publish the FAQ and we would just publish the independence lag a bit later. So maybe the coordinated approach is the best way forward. So I would stop here. I don't know, Luigi, if there's anything else you...
Oh, thank you very much, Luigi and Sylvia. I will now open the floor for comments or questions that board members may have to the working group. Christelle, please.
Yes, thank you for this important work and coordination with the professionals. I agree that it is the right way to do it with the IAASB, because there is a lot of commonalities in the questions. Questions are often at the frontier of assurance work and ethics and independence. And we started the work to some extent, or we progressed in our coordination during this project. And I think it is the best way to continue it. It's whenever it is coherent, accurate, yeah, to do it together.
Thank you, Christelle. Sunam, please.
Thank you. I fully support the proposal. My question is about the process. I believe in the past, I recollect that we had a brief discussion about the process for issuing FAQ and Q&A or NAM. So I'm wondering how this process will take in the future will be different from the process we have undertaken so far. Thank you.
Thank you, Sunam. Maybe you want to respond to Sunam?
I can just say that what we plan to follow the process that we had with the other FAQs as well. So we would share that with the board for input during the board meetings, and we would incorporate the comments we received from the board members. But maybe I turn to Ken as well to see if there is any change in how we want to progress the FAQs.
Yeah, I wasn't anticipating that we would need to share necessarily with the board in plenary session, Sylvia, because otherwise that's going to extend potentially the issuance of the FAQs beyond Q3.
No, via email, so in between the meetings.
Oh, yeah, for sure. Yeah, no, I mean, the way I envisage the process to unfold is that the draft FAQs would first be developed by the supporting team, and we would work with EMAG members, and we will also consult with the former task force members who were involved in the development of the IESA. So there are still some board members and technical advisors who were involved. So to the extent we're able to lean on their input, we would utilize that input, and then we'll have a good draft, a good set of questions, draft responses, etc., that we would circulate to the board for fatal flow review. And as we do that all along, we would be coordinating with our colleagues on IAASB to make sure that they have full visibility as to how we are thinking about the issues and how we are intending to respond to the questions. And if there are any sort of overlapping areas, that we address those in conjunction so that there is full consistency and interoperability of the responses.
Thank you, Ken. Luigi, please.
Yeah, and Ken, you exactly explained what we had in mind. In addition to that, but this was part of our normal way to deal with these activities, we were planning also to share them with the adoption implementation group, because we are really trying to get coordinated with them and to get their feedback. So basically, the process is what you said, but with this addition.
Thank you, Luigi. John, please.
I'm very, very supportive of the idea of FAQs, because I think the people who are on the IMAG are getting the benefit of being able to ask questions and get input and so on. My firm has somebody on there that's hugely valuable, but it's really important that that's pushed out and that there's consistency across the profession. So I absolutely think we need to do it, and I think we need to be thinking about how we're going to promote those FAQs so that people actually know that they are there.
Thank you, John. Sadia, please.
So, Sylvia, you scared me when you said you had 4 to 5 areas and not 4 to 5 questions. So okay, so it's 4 to 5 questions. And I just wanted to caution that sometimes more is not better, because it gets more confusing and we all have to implement it. So a few cautions. Sometimes as technical people, we get very excited. I hope these are not hypothetical situations. These are live situations, and the questions are from more than one person. So more than one person has this question. I also want us to double check that it's not already covered in any of our implementation or support, because that would be duplication while we're trying to be helpful, but it might be repetitive, which makes it more difficult to implement and then fully support the IEESB coordination in real time. So it allows people to implement in real time as well.
Yeah, Sylvia, maybe just on this one. So you said 45 questions, right?
Yes, so we are still coordinating because what we receive from the EMAG and what we receive from the TICG, we need to merge those questions. So, but at the moment we have 4 to 5 questions, yes.
Just for the, including the joint ones, right?
These are the joint ones.
Oh, only the joint ones?
Yes, for the other.
Okay, because that's what I wanted to clarify, whether we were responding to Sadia.
So just to.
I think it's more than just a 45 joint FAQs. So there are additional IESA specific ones.
Can I? So we for the IESA specific one, we have those 4 around those 4 areas that I put on the screen: the transitional provisions, the leader rotation, the scope, and the provision of NAS. I think it's around 8 to 10 questions. And for the joint FAQs, we have mainly on the value chain component and using the work of another practitioner, and those around 4 to 5 questions. We just need to see, sometimes some questions can be merged to sub-questions, so this is still under consideration. I'm turning to Luigi if I'm providing the...
Yeah, just to give an example, we received a number of questions, and we distilled a number of questions about long association. So it is a matter of decide whether we present a Q&A with different scenario or different Q&As, but it is this type of things. Sometimes it is easier to prepare different scenario in a Q&A in order to make sure that we are covering all the practical cases that have been experienced on the market. Sorry, again, the same as it was made many years ago about long association for financial statements.
Thank you, Luigi. Yohai, please.
Okay, thank you, Chair. So this is not specific to FAQ, but I want to make an overall comment. As Reggie mentioned, as sustainability assurance regime regulations are being implemented, more matters will be emerged. So it's really important to advance the activities of EMAG and respond to the issues identified. by ensuring that ESA gains sufficient understanding and trust from stakeholders as a reliable global standard. Through these activities, it can be expected to help prevent fragmentation of the standard. Given the importance of the public trust, public interest, this is one of the areas that should be prioritized in the resource allocations over the project. Thank you.
Thank you, Yohai. And Chana, please.
So I think Mark, remember once the sustainability standards were issued, Mark came out to Australia and we got a lot of questions on long association. I think some people were thinking that we can reset the clock because the mandatory assurance was coming in. I mean, Mark was surprised at some of the questions we got on an open forum. I think, some of the long association things are already there in the standard. So we have to be careful when you're doing FAQs that you don't trip over the standard. Then the second one is APSB has just gone through the process of updating long association for sustainability. So we have the financial statement part, and then we have done the sustainability part. So I can share that document with you because it has already the sustainability, some examples. Maybe you can also help us by having a look at it to see whether we are on the right track. But it might make life easier for you because you could take some of those examples and just do it from a global perspective. Because if there is Australian restriction, then we have put that restriction in. But then it's not a big deal to make it global.
Very well. Thank you, Chana, for the offer and for flagging that. It's one of the topics mentioned there, exactly. Okay, from your side, on your side, Luigi?
No, we do not have anything to add. We are very happy about the comments, and of course, we will take into consideration all the suggestions we received, and we wait for the document to work a little less. And of course, in the due course, you will receive the documentation to review.
Thank you very much to all of you. Philippe, any comment on this topic?
No. Thank you, Gabriela. No comment from the PIOB side, except that on this important topic, the coordination with IESBA efforts included in this project are noted and appreciated.
Yeah, it is worth noting that the PIOB was one of the big supporters of this initiative of the IMAG. So thank you. Sorry, Obi.
Okay, thank you, Chair, and thanks to the IMAG group. I just want to make a point, which is not really in the remit of the IMAG, but given that the adoption or implementation date is very close by, I believe we need to do more in pushing implementation, because there are instances where you find that even though the IESA has been adopted in a country, but not IESA, ISSA 500 has been adopted, but IESA is yet to be adopted. So I think we need to move faster so that we'll be able to get these issues on time. As against when there's a time lag before it is implemented or adopted, and we'll now start having issues. So just to say that we need to move faster within these 6 months in pushing adoption of IESA. Thank you.
Thank you, Obi. This is more a topic for the ANI working group, but with the caveats that we have mentioned yesterday, and in the light of the conversations that we will still have today on resource today and tomorrow, resource allocation. So thank you very much. We will break now. It's well, in the 3 clocks that we have, it's the 3 in one of them, 2:58 on the other, and 2:59 on the other. So I will assume that we are finishing 1 minute before the time, and we will come back in 20 minutes, 3:20 in one of the clocks, I would kindly ask the non-official observers to leave the room, because this is going to be what we'll have now. It's an executive session, which is a private session with just with the board members and official observers and TAs, right? So thank you very much to the observers who have joined us today. I hope to see you tomorrow, and if not, safe travels to where you are going to go. And thank you for joining us. Thank you.